Alright, my dear students, this is Ramesh Soni, and let's go ahead and start our discussion today on the statutory updates which are applicable for November 20 exam. So if you are a student who have taken my classes for May 20 exam, these statutory updates are for you. Baba, basically the amendments which came after 31st of October till 30th of April are applicable for November 20 exam, and here I am to go ahead and quickly discuss about the statutory updates applicable for November 20 exam, right everyone? So if you have taken my classes for May 20, these statutory updates are for you, right everyone? Yes sir. Bye bye everyone, smile, enjoy the class, right? Yes sir. Sir, is there any amendment material which you have gone ahead and prepared? Yes, Baba, I have gone ahead and prepared a statutory update ka amendment material. Basically, the statutory updates which are released by the ICI, the same only I have gone ahead and prepared with my own language, and I have gone ahead and incorporated the crux also, so that it will go ahead and help you in better understanding of the amendments, right? So basically, I put after every amendment, I have gone ahead and put a crux, right? So let's go ahead and start our discussion. Sir, where can we go ahead and download the statutory update which you are going to use in your class? Baba, the statutory update you can go ahead and download from www.rameshsoni.com. Under that, our services, under our services tab, free resources tab, you will have to go to free resources and you can download the statutory update. Sir, can we take a printout of it? Yes, Baba, you can download the statutory update. Take a printout of it and then come and watch the class with me now, right everyone? Let's go ahead and start the class now. Everyone, the first amendment is in the composition scheme. Do you guys remember composition scheme? Yes sir, we do remember composition scheme. Then with me everyone, with me now, let's go ahead and quickly discuss statutory update. Before statutory update for composition, let's go ahead and quickly revise 2 minutes composition levy. Baba, if you guys remember composition levy, sir, in the preceding financial year, if my aggregate turnover was up to 1.5 crore or 75 lakh, sir, if in the preceding financial year my turnover, everyone, if in the preceding financial year my turnover was less than 1.5 crore or 75 lakhs, sir, 1.5 crore in which state? Sir, 1.5 crore, I had told you, Hoja. For Hoja, it was 1.5 crore. H for Himachal Pradesh, O for other state, J for Jammu and Kashmir, A for Assam. For this state, how much was the turnover limit? The turnover limit was 1.5 crore. So you'll have to see that the last year ka aggregate turnover is less than or up to 1.5 crore. Then in the current financial year, you will be eligible to opt for composition levy. Yes, sir. Sir, 75 lakh was for whom? Baba, 75 lakh was for Mantas. Do you guys remember Mantas? Sir, what is Mantas? M for Meghalaya, Mizoram, Manipur, A for Arunachal Pradesh, N for Nagaland, T for Tripura, U for Uttarakhand, S for Sikkim. For these states, I had gone ahead and told you, you have to see that the previous year ka turnover is less than or up to 75 lakh. Then in the current financial year, you will get an option to opt for composition levy. Yes, sir, we were given an option to opt for composition levy. Yes, sir. Now, this option was given to MTR, manufacturer, trader, restaurant wala. Do you guys remember? Sir, manufacturer, trader or restaurant or catering service provider. Yes, sir. And Baba, this option was not given to MINES. Do you guys remember? Yes, sir. Manufacturer of PAIT. Pan masala, aerated water, ice cream and tobacco products which are there. If you are a manufacturer of PAIT, then you are ineligible. I for interstate outward supplier, then Baba you are ineligible. N for NRTP, CTP or Baba non-taxable goods ka supplier. E for person supplying goods through e-commerce. S for service provider. Everyone listen to me very carefully. Service providers were also ineligible. But then, do you guys remember government had gone ahead and told that if you are a service provider who is into restaurant and catering, then you will be allowed to take composition levy. Yes, sir, restaurant and catering wala, even though restaurant and catering is a service, but still they were allowed to take composition scheme. Yes, sir, we remember that. Baba, now government had also gone ahead and told that along with manufacturing, along with your trading ka turnover, along with your restaurant service, you were allowed to provide little services, marginal services, which was, Baba, do you guys remember? Yes, sir, we do remember. Manufacturer, trader and restaurant were allowed to provide little services. You had gone ahead and told they are allowed to provide little services, which is 10% of the turnover, the value of turnover, basically the turnover, I can say value of supplies which were made in the state, basically I can say turnover in state in the preceding financial year, whatever you have gone ahead and provided. Manufacturer, trader, restaurant are allowed to provide how much services in the current year? Last year ka turnover ka 10% or 5 lakh, whichever is higher. I hope you guys remember they were allowed to provide marginal services of 10% of the turnover in the state of the last financial year, or Baba 5 lakh, whichever is higher. Yes sir, you had already told this, Baba. Till now I was not talking anything about amendment. Now I will come to section number 10.1. Baba, section number 10.1 I would like to read with you guys. Yes sir, we would also like to read with you. Everyone smile, enjoy the class, right? Everyone over here now. Sir, section number 10.1, there is just an explanation which has been inserted. Now if you read section number 10.1, section number 10.1 says, notwithstanding anything contained in this act but subject to provision of 9.3 and 9.4, basically they are telling reverse charge ka provisions are applicable if you are a composition dealer. Yes sir, we remember. A registered person whose turnover did not exceed 50 lakh, Baba, this 50 lakh, but then government had the power to increase the amount to 150 lakh, and government had increased it to 150 lakh. I have already told you for Hoja, Himachal Pradesh, other state, Jammu and Kashmir and Assam, the turnover limit is 1.5 crore. And Baba, for Mantas, Mizoram, Meghalaya, Manipur, Assam, Nagaland, Tripura, Uttarakhand and Sikkim, the limit is 75 lakh. So Baba, we will not be reading this limit. This is just told by the act. Further, government had the power to go ahead and increase the limit, provided that the government may, on recommendation of council, increase the 50 lakh limit to 1.5 crore, and government has increased the limit to 1.5 crore and 75 lakh for some states. Yes sir, we know. A registered person whose aggregate turnover in the previous financial year did not exceed 1.5 crore or 75 lakh may opt. Baba, this is told by the act. But further, government had gone ahead, government had the power to increase the limit to 1.5 crore and 75 lakh, which government has increased. May opt to pay in lieu of tax payable by him under section number 9.1. Basically, instead of paying normal rates, they can go ahead and pay this rate, as may be prescribed in rule number 7, but not exceeding. Baba, not exceeding this, but rule number 7 has gone ahead and told already. So we know already that sir, rule number 7 may. We have gone ahead and learned. So Baba, we will not be reading these rates. No sir, we will not be reading these rates. Okay everyone, why sir? Because rule number 7 has prescribed the rate and we are remembering those rates only. Sir, can you tell the rates again? Yes Baba, I will tell you the rate. Manufacturer, trader, restaurant. Manufacturer has to pay 0.5% CGST, 0.5% SGST of the turnover in state. Trader has to pay 0.5%, 0.5% CGST, 0.5% SGST of taxable turnover. Basically, those turnover on which GST rate is there. See, manufacturer pays on taxable turnover also and exempt turnover also. But trader only pays on those turnover which are taxable supplies, on which tax rate is there. Are we clear? Yes, sir. Restaurant pays 2.5% and 2.5% of turnover. This all were already discussed. Yes sir, we remember. Let's go ahead everyone now. This second proviso says, provided further that if you are a manufacturer, trader, restaurant wala, sir, I'll rub this. Sir, it is further provided that if you are a manufacturer, trader or restaurant wala, you are further allowed to provide services. See over here, you are further allowed to provide services not exceeding 10% of turnover in state. Baba, you are allowed to provide services 10% of turnover in state or UT in the preceding financial year, or 5 lakh, whichever is higher, or rupees 5 lakh, whichever is higher. I hope you are clear. Yes sir, we already know this. Till now I was not discussing the amendment. Amendment is now. Everyone over here, there is an explanation which has been inserted over here. This explanation earlier also it was there. So if you had taken my classes for May 20, Baba, the same thing was there that time also. Do you remember? We don't go ahead and include interest or discount. Yes sir, interest or discount is never included when you go ahead and take the turnover. Baba, the same thing has been now included in the act by an explanation. Earlier the same thing was told by an order. Now they have gone ahead and included it in the act itself. Now what are they telling? For the purpose of the second proviso, this is the proviso number 2. The value of exempt supply of services provided by way of extending deposit, loans or advance, so far as the consideration is represented by way of interest or discount, shall not be taken into account for determining the value of turnover in state or UT. Baba, they are telling when you are taking last year ka turnover in state or UT, of that you are allowed to provide 10% services. Baba, everyone listen to me very carefully. If I am a manufacturer or I am a turnover or I am a trader or I am a restaurant service provider, last year ka turnover ka little services I was allowed to provide. For an example, everyone listen to me very carefully. For an example, I am a person who is into trading of mobile phone. Now, along with the trading of mobile phone, I am also allowed to provide little services. Now, how much services I can provide? By last year ka turnover ka 10% or 5 lakh, whichever is higher. Now, last year ka turnover when I am looking, in the last year ka turnover, they have gone ahead and inserted an explanation and told, in your last year ka turnover, don't include 10% in that 10% of the last year ka turnover may don't include interest or discount. That's it. So let's go ahead and see one example. Everyone listen to me very carefully. This is one example which I have gone ahead and written. Preceding financial year, my turnover was 80 lakh. Everyone listen. Preceding financial year, my taxable supplies ka turnover was 80 lakh. My interest income or my discount, Baba, interest or discount which I am earning. Basically, I have given loans or I have given advances to the bank and bank has gone ahead and given me interest. Now, I have interest income of 20 lakh. This year, everyone, this is preceding financial year. Preceding financial year, taxable supplies 80 lakh. Preceding financial year, interest income 20 lakh. Now, I can provide last year ka turnover ka 10%. So, can you tell me how much ka 10% you will take? You will take 10% of 80 lakh or you will take 10% of 100 lakhs. If you go ahead and take 80 lakh ka 10%, then you can provide services 8 lakh or 5 lakh, whichever is higher, 8 lakh. If you take total 100 lakhs, then Baba 100 lakhs ka 10% means 10 lakh or 5 lakh, whichever is higher, 10 lakh. Yes or no? Now government have made it clear. Government have made it clear that last year ka turnover when you take, of that turnover 10% services you can provide. Last year ka turnover may interest should not be included. It means they have gone ahead and told this interest income should not be included in the last year ka turnover when you are calculating that 10% of the last year ka turnover for the purpose of providing services. Hence, so sir, this is not correct. We will be taking 10% of 80 lakh, that is 8 lakh or 5 lakh, whichever is higher, 8 lakh. You can provide marginal services, how much? 8 lakh. Got it, everyone? Yes, sir, we got it. Now, one more example. My last year, everyone, my last year, taxable services were 80 lakh. You don't see that. You see over here. My interest income last year was 20 lakh. My exempt supplies were 50 lakh. Baba, other exempt supplies. Interest is also an exempt supply. Other exempt supplies I am telling. So, can you tell me what is the total turnover of this person? Now, on which turnover will we calculate that 10%? Baba, we should not include interest income and hence I can say 80 lakh plus 50, 130 lakh was my last year ka turnover. Last year ka turnover in the state was how much? 130 lakh ka 10%, I'll be allowed to provide services 13 lakh or 5 lakh, whichever is higher, how much? 13 lakh. Simple? Yes, sir. Next, one more example. Everyone, sir, if you want to copy, Baba, whenever you want to copy, you can pause and copy, right? Everyone over here. Sir, my previous financial year, I am in the state of Karnataka also, I am in the state of Delhi also. Sir, Karnataka, the turnover limit applicable is 1.5 crore. Delhi, the turnover limit applicable is also 1.5 crore. No problem. Sir, taxable supplies, exempt supplies, interest income. Baba, interest income you should not consider. So, Baba, when you are in the state of Delhi, Baba, everyone listen to me very carefully. You are allowed to provide 10% or 5 lakh, whichever is higher in every state. So, if under my PAN, under a single PAN number, I have registration in Karnataka also, I have registration in Delhi also. In Karnataka, I can provide Karnataka ka last year ka turnover ka 10% or 5 lakh, whichever is higher. In Delhi, I can provide Delhi ka turnover of the last year or 5 lakh, whichever is higher, that much services I can provide. Now when you are taking Karnataka ka turnover, please don't include interest. It means 80 lakh ka you can provide 10% of 80 lakh or 5 lakh, which is whichever is higher. That means in Karnataka I can provide services how much? 8 lakh. Next, sir, in Delhi your taxable supplies is 30 lakh, interest income is 10 lakh. Baba, interest should not be considered, and you can provide 10% of 30 lakh, that is 3 lakh or 5 lakh, whichever is higher, 5 lakh. So this much services you can provide. Right everyone? Yes sir. Baba, this was your first amendment which was told. If you want, you can pause and copy this down. Always remember, in composition levy, nowhere you go ahead and consider interest or discount ka income. Although exempt supplies, but you don't go ahead and consider it. Are we clear? Yes sir. The same has been told by the means of an amendment. Baba, amendment is only this much. Where is the amendment? Amendment just says that, sir, for the purpose of second proviso, means whenever you are taking last year ka turnover ka 10%, the last year ka turnover may don't include interest or discount ka income. Although exempt income, but don't include it. Are we clear? Yes. It says the value of exempt supply of services by way of extending loan deposit, so far as the consideration is represented by way of interest or discount, whatever interest or discount you have received, shall not be taken into account for determining the value of turnover in the state or union territory. See Baba, if you go ahead and consider last year ka turnover mein interest or discount, then Baba, your last year ka turnover will become 100 lakh. If your last year, 1 minute, if your last year ka turnover you consider as 100 lakh ka 10% means 10 lakh or 5 lakh, whichever is higher, means you can provide 10 lakh ka services. Government doesn't want you to go ahead and provide higher amount of services. Government is telling, Baba, you go ahead and exclude the interest income and then only go ahead and calculate the amount of services which you can provide. So Baba, this will not be correct. Are we clear everyone? Yes sir. Now listen to me one more thing. This is not an amendment, but I'll tell you quickly. Now you can provide how much services? 8 lakh services. In the current year, you can provide 8 lakh services. Now, when you are seeing that 8 lakh services, no, in the current year, if you have received any interest or discount, that also should not be considered. Just for your remembering purpose, it's already there in the book. Sir, if you are seeing how much services you can provide, then Baba, last year ka turnover say exclude interest ka income, that will give you 80 lakh. 80 lakh ka 10% means 8 lakh. Or 5 lakh, which is higher, 8 lakh is higher. You can provide current financial year mein, you can provide services along with your manufacturing, trading or restaurant turnover. You can provide services. How much? 8 lakh. Now, when you can provide in the current financial year 8 lakh services, these services may also don't include interest or discount. Means if you have gone ahead and provided current year mein services which is 7 lakh rupees and you have received also interest income. Baba, interest income is also because you have gone ahead and given some services of giving someone loan or you have deposited some money in the bank account. That's also a service, right? Yes, sir. Supposingly you have received 3 lakh interest income. No, Baba, you will not become ineligible. You will not go ahead and consider this 3 lakh as your services ka turnover. Are we clear? So, Baba, your turnover will be 7 lakh only. Can I go ahead everyone? Yes, sir. We got it. Can we go ahead? Yes, sir. Now, this is the amendment part which I have gone ahead and told you. Next. Actually, this is not an amendment. This was earlier told by a removal of difficulties order which was issued by the government. Now, the same has been included in the act by an explanation. Okay, sir. Next. Do you remember I had always gone ahead and told you who are ineligible? Yes, sir. You had gone ahead and told her mines are ineligible. Everyone listen to me very carefully. Whenever I used to say that mines is ineligible, everyone listen. Whenever I used to say mines is ineligible, M for manufacturer of pan masala, aerated water, ice cream and tobacco. I for interstate outward supplier. Baba will be little slow because we are understanding all the amendments in detail, right? Yes, sir. Next, N for a non-taxable goods ka supplier. And I also used to say N for NRTP and Baba CTP. Do you remember? I always used to tell you N for non-taxable goods ka supplier, N for NRTP and CTP. E for person supplying goods through e-commerce. S for service provider. Baba, everyone listen to me very carefully. Earlier also I used to tell you this, that NRTP and CTP are ineligible for composition scheme. So if you are a NRTP or CTP, you are ineligible to opt for composition scheme. Do you know, I used to tell you earlier, but this was written in rule number 5. Earlier the same was written in rule number 5. Now some people went ahead and told, how can a rule make one person ineligible? It has to be told in the act, because rules are to support the act. So government went ahead and told, okay Baba, no problem, we'll write it in the act only. Right everyone? So nothing, it's not a change actually. Earlier CTP and NRTP are ineligible. The same thing was written in the rules. Now it has been put in the act because rules are to support the act. So it should be written in the act. Act ka backing has been given and they told, okay, we will write it in the act. So they went ahead and told in section number 10(2) that sir, NRTP and CTP are also ineligible for composition. Earlier the same thing was told by rule number 5. Now some people went ahead and told, how can a rule say something which is not told by the act? Rules are to support the act. So government went ahead and told, okay Baba, we'll write it in the act. And in the act government went ahead and told CTP and NRTP are ineligible. Again nothing new. I have already told it to you when I was talking in the class in the previous attempt also, because earlier I used to teach it through rule number 5. Now the same has been told in the act. So sir, what has changed? Nothing has changed. CTP and NRTP are ineligible. That was already there, that is now also there. Earlier it was written in the rules, now it is also incorporated in the act. Next, third amendment. This is something which I want to talk quickly. Everyone listen to me very carefully. Do you guys remember notification number 2/2019 dated 7th March 2019? Do you guys remember? Yes sir, we remember that sir. Government had gone ahead and told, if you are a person who is ineligible under manufacturer, trader, restaurant, Baba, you are not eligible to opt for composition scheme under section number 10(1), then government had gone ahead and told that we can go ahead and take. So if I am a service provider or I am a person who is providing goods plus services and the services ka portion is more than 10%, Baba, listen, if I am a person who is providing what? If I am a person who is providing services, chartered accountant, or Baba, I am a person who is going ahead and providing goods also and services also, and services is not that 10%, it is more than 10%, might be 40% services, then Baba, I will not be eligible to opt for, section number 10(1). And government had gone ahead and told service providers, or basically a person who is providing goods plus services and the services ka portion is more than 10% or 5 lakh, whichever is higher, then that person was allowed to go ahead and take the benefit of notification number 2/2019 dated 7th March 2019. I hope you guys remember this notification was there earlier. We had gone ahead and discussed in detail this notification. Yes sir, if I am a person who is ineligible under composition scheme, then I was allowed to go ahead and take the benefit of notification number 2/2019 dated 7th March 2019. Nothing. Now this notification number 2/2019, no, they have gone ahead and incorporated this notification in the act only. Earlier people were allowed to take composition scheme. Baba, if you are ineligible for composition scheme, then if you are a service provider, then you are allowed to take the benefit of notification number 2/2019. Now they have gone ahead and incorporated this notification number 2/2019 in the act itself. In the act itself, they have gone ahead and incorporated, and now it is called section number 10(2)(a). Are you guys able to understand? So sir, if I am a person who is ineligible to opt for composition scheme, basically under section number 10(1) or 10(2), Baba, 10(1) or 10(2), yes sir, 10(1) and 10(2) both are written over here, you guys can read. Basically, if you are a person who is a service provider, I am a service provider, or I am a person who is providing goods plus services more than that 10% ka limit, then I will become ineligible under composition. Then government told, Ramesh, if you are a person who is ineligible for composition scheme, then Baba, earlier people were given one notification number 2/2019 ka benefit, where if you want you can go ahead and take the benefit of notification number 2/2019. Now, the thing that notification number 2/2019 has been incorporated in the act and it has been named as section number 10(2)(a). That's it. A registered person who is ineligible under section number 10(1) or 10(2), whose aggregate turnover in the last financial year, how much? Baba, service providers के लिए 50 lakh. Sir, if I am in Mentus or I am in Hoja, whichever state you are there, for you the turnover limit will be 50 lakh. Okay, sir. So, in the preceding financial year, your turnover limit did not exceed 50 lakh. Then in the current financial year, up to a limit of how much? 50 lakh, you can go ahead and opt. An option is given to you. And what is the option? The option is, Baba, now it is not the benefit of notification number 2/2019. It is option to opt for composition scheme. You will be given a good name now. Your name is not notification number 2/2019. Your name is section number 10(2)(a). Basically, your name is composition dealer only now. You are not a person availing. Baba, you will no more be called a person availing the benefit of notification number 2/2019. Your name, formal name, has been given as composition dealer. Are we clear, everyone? Yes, sir. Sir. So, if I am a chartered accountant, everyone, before this amendment, chartered accountant used to take the benefit under notification number 2/2019 for service provider. Now, what will I do? I will not go to notification number 2/2019. Now, I will go to section number 10(2)(a). Baba, section number 10(2)(a) says that if you are a person whose turnover in the preceding financial year was less than 50 lakh or up to 50 lakh, may opt to pay tax instead of paying normal that is 18%, etc. An amount calculated at the rate not exceeding 3%, of the turnover in state or turnover in the Union Territory. Basically, you have to pay now 3% CGST and 3% SGST. Are we clear? Yes, sir. Sir, he will be ineligible when? Who are the people who are ineligible? Sir, who are the people who will be ineligible? If you are a person, if you are a manufacturer of those goods which are notified, basically PAIT. Okay, everyone. I for interstate outward supply. If you are making interstate outward supply of goods or service, you will become ineligible to opt for section number 10(2)(a). N for, sir, those goods which are non-leviable, non-taxable goods ka supplies if you are doing. E for, sir, if you are supplying through e-commerce operator, if you are supplying goods or services through e-commerce, you will become ineligible. S for service provider. Baba, it is for service provider only. How will service providers be ineligible? So, Baba, here you will have to remember that if you are MINE, then you will become ineligible. Manufacturer, sir, listen to me very carefully. Government have gone ahead and introduced one new scheme for whom? For service provider or who are supplying mixed supplies. Mixed supplies means who are supplying goods plus services, and the services ka turnover is greater than 10% of turnover in the preceding financial year. Then, Baba, you can go ahead. Basically, you are providing more than marginal services. Then you can go ahead and opt the option under section number 10(2)(a). For section number 10(2)(a), you will have to see your preceding financial year ka turnover should be up to less than or equal to 50 lakh. Then in the current financial year, you will have an option up to 50 lakh. In the current financial year, this is the preceding financial year. In the current financial year, up to 50 lakh, you can go ahead and opt for this composition scheme under section number for section number 10(2)(a) wala composition scheme. Are we clear, everyone? Yes, sir. Sir, how much do I have to pay? Of your turnover, you will have to go ahead and pay 3% CGST and 3% SGST. Of what? Of your goods and services, both which you are providing. Are we clear? Yes, sir. Sir, who are the people who are ineligible? Ineligible are MINE. Sir, what is M? M for manufacturer of pan masala. PAIT, manufacturer of pan masala, aerated water, ice cream and tobacco are ineligible. I for interstate outward supplier of goods or services are ineligible. N for non-taxable goods ka supplier, NRTP or CTP are ineligible. E for person supplying goods or services through e-commerce are ineligible. S is not written here because it is a scheme for service provider only. How will you make service providers ineligible? Are we clear, everyone? Yes, sir, we got it. So this was the new scheme which has been introduced Baba, earlier the same thing I had taught you, which was told by notification number 2/2019. Now notification number 2/2019 has been incorporated in the act and the name is given as section number 10(2)(a). So for your exam, this will come and you have to go ahead and say that okay, for your exam they will ask you, Ramesh is a chartered accountant whose turnover in the last year was 40 lakh. Is he eligible to opt for composition scheme? Yes sir, he is eligible to opt for composition scheme under section number 10(2)(a). Okay, now if Ramesh is opting for composition scheme under section number 10(2)(a), what is the turnover up to which Ramesh can opt for composition scheme? Up to 50 lakh Ramesh can opt for this composition scheme. What is the tax Ramesh has to pay? Sir, in the current financial year, Ramesh's turnover is supposedly 30 lakh rupees. 30 lakh rupees, Ramesh has to pay how much GST? 3% CGST and 3% SGST. That's it everyone. You will have to remember this because for your exam, you will no more quote. For your exam purpose, remember always, you will no more quote notification number 2/2019. Although notification number 2/2019 has not been deleted yet or not been suspended yet, but still for our exam purpose, we will be very careful and we will be quoting notification number 2/2009. No, we will not be quoting notification number 2/2019. We will be writing section number 10(2)(a). So wherever earlier you had learned notification number 2/2019, now you will be writing section number 10(2)(a). Right everyone? Yes sir, we got it. Everyone please come back. Next, provided that, sir, if I am opting for section number 10(2)(a) ka composition, Ramesh Soni is opting for section number 10(2)(a) ka composition in Karnataka, then Baba, if from Karnataka I go ahead and opt for notification number 2, if I am opting for section number 10(2)(a) ka composition scheme in one state, then all my states ka all states mein my registration will come under section number 10(2)(a). If by chance I tell notification number 2/2019, you think that sir is telling wrong. What we should now always be talking section number 10(2)(a), which is composition scheme only. So Baba, service providers were earlier given the benefit by notification number 2/2019. Now the same benefit has been included in the act. So we are no more called person taking the benefit of notification number 2/2019. We are now called composition dealers. Are we clear everyone? Composition scheme ka we are now brought under composition scheme. Are we clear? Yes sir, got it. So earlier this scheme was provided by notification number 2/2019. However, now the same has been included in the act. Act means section number 10. We have gone ahead and included and named it as section number 10(2)(a). All registered person, same PAN to opt together. So Baba, if I am a service provider having registration in Karnataka also and Tamil Nadu also, if I am taking now, if I am going under composition, that is section number 10(2)(a), may I am going under composition, then Baba, for both the state I have to go for composition, either take it together or get out together. Right everyone? Yes sir. Next, further, rule number 7 has been amended to provide, Baba, rule number 7 which goes ahead and tells you the rate. Rule number 7 tells you the rate for composition. Rule number 7 has been further amended to provide that Baba, the rate will be 6%. That is 3% under CGST, 3% under SGST. Are we clear everyone? 3% under CGST of your goods and services which you are supplying, 3% under SGST of the goods and services which you are supplying. Yes sir. Next, section number 10(3) also they have gone ahead and made a small change, nothing. Now section number 10(2)(a) has come, right? Section number 10(2)(a) has come. So under section number 10 subsection 3, just they have gone ahead and included the reference of section number 10(2)(a). It says that, sir, in the current financial year, when you are going ahead, everyone here, in the current financial year, this is the preceding financial year, your turnover was less than 50 lakh rupees, then in the current financial year, you can go ahead and provide up to, in the current financial year, supposingly here, up to 50 lakh, you can go ahead and opt for this option. Supposingly in the 31st of December it has lapsed. So from 1st of January, Baba, in the current financial year, you will become normal taxable person, take ITC, charge GST. So Baba, scheme shall lapse. This scheme will also lapse if you go ahead and cross your turnover of 50 lakh. Right everyone? Yes sir, we got it. Basically, nothing. Earlier they were telling you the same thing. For 150 lakh and 75 lakh. Everyone listen to me very carefully. Composition scheme now is there are three limit. One is 150 lakh, which is for Hoja state, 75 lakh for Mentos, and if you are a service provider or goods plus service ka provider, then Baba, for you the limit is 50 lakh. So Baba, if you see in the preceding financial year, you are eligible. Preceding financial year ka aggregate turnover is always seen so that you can know whether you are eligible or not. Then in the current financial year, this scheme you can opt, this section number 10(2)(a) ka scheme, you can opt up to 50 lakh. Sir, what if I cross 50 lakh? Then Baba, scheme will lapse. Go online. Sir, in the current financial year, if I cross 50 lakh, then Baba, from the day you cross, next day onwards, you will become a normal taxable person, take ITC, charge GST, take ITC, charge GST, and also you have to go online and file an intimation that you are opting out of composition. The same things will apply that is told by section number 10(3). Section number 10(3) mein there is no amendment, only small change has been made because of the introduction of section number 10(2)(a). Because of the introduction of section number 10(2)(a), they have just gone ahead and introduced section number 10(2)(a) here also, and have told that in current financial year, the day you cross 50 lakh, the scheme will lapse. Okay, sir. Do you remember normal section number 10(1) mein, if you are a composition dealer, you cannot take ITC, you cannot charge GST. Baba, if I am a person under section number 10(2)(a) also, I am a composition dealer only, not to take ITC, not to charge GST. Earlier, all these things were told by notification number 2/2019. Now, the same has been included in the Act. So, they are telling a taxable person not to collect tax and not to charge ITC. Baba, I should not take ITC, not to collect any tax. I should issue bill of supply. I hope you guys remember. Nothing. They have gone ahead and just included reference to section number 10(2)(a). Basically, if you are a person, if you are a service provider who has taken composition scheme, then Baba, last year ka, then whenever you buy, don't take ITC. Whenever you sell, whenever you provide service, don't charge GST. You have to pay 6%, that is 3% CGST and 3% SGST on your goods and services out of your own pocket. That's it. Okay, sir. Next. This is something important. Everyone listen to me very carefully. I will go ahead and first tell you this, and then we'll go ahead and read what is told in the Act. Everyone listen to me very carefully over here. 1 minute. Over here, everyone. 1 minute. Everyone over here. Tell me one thing. If I tell you, this is my first year of operation. My first year of operation. Okay, everyone here. Now, tell me one thing. This is Ramesh. I started my business now. I started my business. Sir, the preceding financial year ka turnover will be seen to see whether you are eligible or not. Baba, for me to see whether I am eligible or not, aggregate turnover of the preceding financial year will be seen, which because I have started my business here on 1st April, I have just now started my business, the last year ka turnover will be 0, and hence I can go ahead and say, Baba, that I am eligible. Now, listen to me very carefully. Tell me one thing, in the current financial year, will I take GST registration? Sir, for people, the limit is 40 lakh also, for some people it is 20 lakh also, for some people it is 10 lakh also. I hope you guys remember. So, up to the turnover limit of 40 lakh or 20 lakh or 10 lakh. I hope you guys remember. Otherwise, go to your registration chapter, section number 22, subsection 1. I had gone ahead and taught you this limit. Yes, sir. I'll not talk about it now. Otherwise, I'll have to teach you whole GST again. Everyone listen. Up to this limit, you will not have to take registration only. Correct? Yes, sir. Now, once you cross 40 lakh, 20 lakh, 10 lakh, then you will get two options. Either to take normal scheme, either to take normal registration or to take composition registration. Yes, sir. So, I'll not talk about normal registration. If you have taken composition ka registration, you will have to pay tax on your turnover in the state. Yes, sir. I hope you guys remember that always you pay tax on your turnover in the state. So, sir, now I'll be eligible to offer compulsion scheme up to 150 lakh, some states ke liye 75 lakh, and if I'm a service provider up to 50 lakh. Baba, will you pay GST? Listen to me very carefully. Will you pay GST composition rate pay on this? At composition rate? No, sir. Why? Because, Baba, this is my first year of operation. Up to 40 lakh or 20 lakh or 10 lakh, whichever is applicable to me, I will not have to take registration only. So, I will not be liable to pay any GST. But, sir, after I have crossed that aggregate turnover of 40 lakh, 20 lakh or 10 lakh, I'll become liable for registration. If I take normal registration, then normal tax I have to pay. I'm telling, if you have taken composition registration, then you will have to pay GST, right? On turnover in state. So, sir, when you are taking your turnover in state to pay the GST, which turnover will you take? Will you include this turnover also? Baba, will you include this turnover also when you are paying the GST? No, sir. For payment of GST, we'll take the turnover from the day I become liable, correct? From the day I become liable up to the year end, basically. Up to the year end, or basically when up to the time when I don't cross that limit of 150 lakh. So, Baba, on this you will have to go ahead and pay GST, that is at the rate of composition rate. Yes or no? Yes, sir. Can I go ahead, everyone? Sir, whenever you have to pay tax, under composition, sir, if it is my first year of operation, listen to me very, very carefully, everyone. Sir, up to a limit of, this is my first year of operation. Ramesh, I am a chartered accountant. I have started my business. Up to 20 lakh, I don't have to take registration, right, everyone? So, Baba, up to 20 lakh, I am a chartered accountant. I'll not take registration. Now, once I cross this 20 lakh, so up to this, I don't have to pay any GST. Why, sir? Because up to 20 lakh, you don't have to take registration only. But when you have to pay GST, after this 20 lakh, up to this turnover, which is 50 lakh, which is allowed to you, means up to the year end, you should not have crossed 50 lakh. On this turnover, this is known as turnover in state for the purpose of payment of tax. On this, you will have to go ahead and pay GST. Are we clear? Supposingly, this turnover is 30 lakh rupees, full 30 lakh. Okay, then you will have to pay GST, which is at the rate of composition rate. Can I go ahead? Now, tell me one thing. Whenever you are seeing aggregate turnover, for example, this is the current financial year. Now, next year when you will see aggregate turnover, Baba, aggregate turnover of the last year you will see to see whether you are eligible or not. Everyone, okay, I will say this is 31st March. My turnover was only 25 lakh here and 20 lakh here. This is my first year of operation. Everyone listen to me very carefully. This is my first year of operation. Up to 20 lakh, will I pay any GST? No, sir, because you are not liable for registration. Yes, sir. Next. Sir, when I cross 20 lakh, up to the year end, I will see my turnover 25 lakh. On this, I'll have to pay composition rate because I am a service provider at the rate of 6%. Anyone? Any doubt? No, sir, we don't have any doubt. Now, so for the purpose of payment of tax, when you see the turnover, you don't see from 1st of April up to the date you become liable for registration. From the 1st of April up to the date you become liable for registration. Up to the date you become liable for registration. For this, you don't include in your turnover in state and you don't pay GST on this. Baba, everyone, listen. When you see whether you are eligible, for eligibility, you always see aggregate turnover. For payment of tax, what do you see? You always see turnover in state. So as of now, I am talking for payment of tax, you always see turnover in state. But which turnover? The turnover after you go ahead and cross. If it is your first year ka turnover, then Baba, once you go ahead and cross the limit applicable for registration from there you will have to pay tax on the turnover in state. So for the payment of tax, turnover in state will never include the turnover till you become liable for registration. On this you will never pay GST. You will pay GST only on this turnover in state. I hope everyone is clear. Now, this is supposingly 2019 and this is 31st March 20. Now when I go to 2021, this is the year 2021. This is the current financial year. Baba, when you see in the current financial year, you will see last year ka turnover. So Baba, this will become preceding financial year. Now when you are seeing last year ka turnover, to see whether you are eligible for composition or not, in the last year ka turnover, what are the things you will include? Sir, in the last year ka turnover, I will take this complete turnover. When I am checking eligibility in the current financial year, last year ka aggregate turnover mein, I will include this also, I'll include this also. So can you tell me what is your aggregate turnover of the last year? Yes sir, to check eligibility 20 lakh and 25 lakh, because to check eligibility we have to see aggregate turnover, and aggregate turnover of the last year will include this also and this also. Are we clear everyone? Yes sir, we got it. This has been told by the Act. Now in the Act they have gone ahead and told this. Let's understand. Section number 10(5). Taxable person to pay tax under composition even if ineligible. Taxable person pays tax under composition, he shall be liable to pay penalty. Baba, if you are not eligible, you have to pay penalty. So better when you become ineligible or you cross the threshold limit, get out of composition, otherwise you will be liable for penalty. That you guys already know. Here also once reference has been made to section number 10(2)(a) because it is newly inserted. Okay sir, this is the important amendment. Explanation has been inserted. I have gone ahead and given one crux of the explanation. Let's go ahead and see. For the purpose of checking eligibility, Baba, tell me one thing. When you are checking eligibility in the current financial year, you will see aggregate turnover of the last year. Yes or no? You will go ahead and see this turnover also, this turnover also. Yes, yes, they have told. Aggregate turnover shall include supplies from 1st April up to the date of becoming liable. Yes sir, it will include 1st April up to the date of becoming liable for registration. This will be included in the aggregate turnover. When you are checking the eligibility, this is to be included. This also has to be included. Are we clear everyone? Yes sir. Sir, please tell once again. Everyone listen to me very carefully. Supposingly, I will tell you once again. This is my first year of operation. This is my first year of operation. 1st April 2019, I started my business. Once you start your business, you don't take registration up to 40 lakh, 20 lakh or 10 lakh. So Baba, up to 40 lakh, 20 lakh or 10 lakh, you don't become, here once you cross, you become liable. So sir, supposingly I will talk about service provider which is up to 20 lakh. Okay. So sir, service provider up to 20 lakh, he will never pay GST. He will never pay GST. But sir, once you become liable, here you will have to go, this is to be considered in turnover in state, and Baba, on the turnover in state, you will have to pay GST. Right everyone? Any problem? No sir. We are talking now when you see the turnover, aggregate turnover of this person. Now supposingly I am talking about current financial year. This year, when you will see the person ka aggregate turnover of the last year, you should include this also. You should include this also. They are telling you should include. Include means both should be included. That's all is the clarification. So sir, if here the turnover was 25 lakh, here the turnover was 20 lakh, 25 also should be included. Here when you are seeing the aggregate turnover to check the eligibility, aggregate turnover will be 25 lakh and 20 lakh of the last year. How much is the aggregate turnover? And hence 45 lakh you will be eligible for composition scheme. Can I go ahead? Yes sir. Next. But sir, whenever but exclude interest and discount. I have always told you, whenever you see aggregate turnover, whenever you see turnover in state, always exclude interest and discount. Interest and discount ka income is never included anywhere in composition. Are we clear? Yes sir. For the purpose of paying tax, can you tell me, when I am telling you this year, which year sir? This year. On what amount will you pay tax? Tell me, on what amount will you pay tax? You will tell me, sir, on this amount I'll never pay tax. I will pay tax only on this. Yes or no? They have clarified this only. They are telling turnover in state or UT for the purpose of paying tax shall exclude supplies from 1st April up to the date of becoming liable for registration. Baba, you should not include this in your turnover in state or UT. Baba, although this is also your turnover in state, but this should not be included for paying taxes. Are we clear, everyone? Yes, sir, we got it. Always remember, when you are taking turnover in state or here, supposingly you had interest income of 10 lakh rupees. Don't include interest income. Interest income never to be included. Are we clear, everyone? Sir, here also I had 10 lakh rupees interest income. Don't, never. So, sir, when you are taking 45 lakh, there also never include interest incomes. Whatever interest incomes are there, never include interest and discount. Are we clear? Yes, sir, we got it. Listen to me very carefully. I will tell you once again. I am telling, sir, whenever you are taking turnover in state, Baba, please exclude this. Turnover in state for the purpose of paying tax, exclude 1st April to date of becoming liable for registration, and also exclude discount or interest, because on interest or discount you never have to pay any GST also. Are we clear? Yes, sir. Next, in the current financial year, when you are checking aggregate turnover, include this also, but don't include interest. Are we clear, everyone? The same thing has been told. The same thing has been told by this explanations which I have gone ahead and told you in shortcut. Are we clear, everyone? Yes, sir. Can we see one question? Yes, sir. Ramesh Soni started a firm on 1st April. Everyone, I started a firm on, I'll write over here, 1st April 2020. Okay, 1st April 2020. 30th June, turnover was 20 lakh. So, sir, if I am a chartered accountant, I have to take benefit of notification number 2 bar 2019. No, sir, now I will go ahead and say section number 10(2)(a). I will not take notification number 2 bar 2019. I will say section number 10(2)(a). So, sir, up to 30th of June, my turnover was 20 lakh. So, sir, till here, my turnover is only 20 lakh. Now you tell me one thing, do I have to pay any GST? No, sir, you don't have to pay any GST. He applied for composition scheme under 10(2)(a. Baba, 10(2)(a mein he went to composition scheme. Turnover for second quarter. Baba, this was the first quarter. Always remember, GST mein quarter is fixed. April, May, June, July, August, September. So, sir, July, August and September. July, August, September. His turnover was 30th September May, his turnover was how much? 10 lakh. Okay, sir. What is the tax liability? Can you tell me 10 lakh pe how much is the GST? Will he pay GST on 20 lakh and 10 lakh both? No, sir. On 20 he is not liable. So, when you are checking, when you are seeing the person ka turnover in state to pay the tax, you should not include up to the date of becoming liable. So, on 10 lakh he will be liable to pay 6%. Sir, how much? He will be paying 60,000. Are we clear? Yes, sir. Listen to me very carefully. The same thing I have told over here, but I am not concerned with this. I want to tell you little more. Listen to me very carefully. I am telling Ramesh Soni ka 1st April 2020, Ramesh Soni started business. Till 30th June, my turnover was 20 lakh. Okay, everyone listen. GST on this I will not pay. Till 30th September, 10 lakh. Till 31st December, 5 lakh. Listen to me very carefully, everyone. And till 31st March, my turnover again 5 lakh. Right? On this I will pay 6%. 6%. 6%. Sir, supposingly, there is an interest income of 1 lakh, don't include. 1 lakh interest income, don't include. 1 lakh interest income, never include interest and discount. Sir, here also one interest income of 5 lakh was there, never include. Are we clear? Now you tell me one thing, what is his turnover in state for the purpose of payment of tax? Sir, 10 lakh pay he will pay, 5 lakh pay also he will pay, and 5 lakh pay also he'll pay. That you understood? Yes, sir. Now can you tell me 21, 21, 22, 21, 22 when you are checking his eligibility, right? You will have to take last year ka aggregate turnover. Last year ka aggregate turnover if you see 20 lakh plus 10 lakh plus 5 lakh plus 5 lakh. Sir, last year ka interest income if you see 5, 6, 7, 8. 8 lakh is his interest income. Interest also comes in aggregate turnover. Yes, everyone. Now you tell me what will be his aggregate turnover when you are checking this year. Generally, interest comes in aggregate turnover. But for composition, when you are checking the eligibility, can you tell me what is his aggregate turnover? What is his aggregate turnover you will consider? They have told, Ramesh, include this. Include 20 lakh, but don't include interest. So his aggregate turnover will 20, 30, 35, 40. 40 lakh. This aggregate turnover, Baba, last year ka aggregate turnover is less than 50 lakh. Ramesh Soni in the current financial year, because his turnover, aggregate turnover in the last year is less than 50 lakh. In the current financial year 21-22, also I'll be eligible to be under composition, that is section number 10(2)(a). Are we clear, everyone? Yes, sir, we got it. That's all I wanted you guys to understand. They have gone ahead and told, for the purpose of checking eligibility, Baba, eligibility you are checking here. When you are checking eligibility in the current financial year, last year ka turnover you see, so last year ka aggregate turnover may include this, but exclude interest and discount. That's all they have told. Include 1st April up to the date of becoming liable, but exclude interest and discount. This is to be included, but interest and discount always has to be excluded. Are we clear, everyone? Yes, sir. Where is it? Yes. This is to be included, but interest and discount is to be excluded when you are seeing last year ka turnover for the purpose of checking whether you are eligible or not. Okay, sir. Next. For the purpose of paying tax, when you are checking whether you have to pay tax or not, always remember, if it's your first year of operation up to the date of becoming liable, please exclude that amount. Turnover in state or UT pay, you have to pay tax. Yes, sir. When I have to pay in turnover in state or UT, then Baba, GST has to be paid only on the amount which is after you become liable. Here you become liable. After you become liable up to the date, year end, basically whatever is the turnover on that, please exclude. See here on this you have to pay GST and also exclude interest or discount. Exclude supplies from 1st April and also exclude interest on discount. Are we clear, everyone? This was just an explanation, actually a bare understanding which you guys already know, right, everyone? Here we are done with your composition ka amendment. Everyone listen to me very carefully. What are the amendments done in composition? Everyone listen to me very carefully. What are the various amendments that have been brought into composition? Everyone over here. Number 1, they are telling when you can provide marginal service 10% of turnover in the last year or 5 lakh whichever is higher. Last year ka turnover when you are taking, of that 10% you are taking, last year ka turnover may don't include interest or discount. Okay, sir. CTP and RTP is ineligible. Earlier the same thing was told by rule number 5. Now they have been included in the act only, section number 10(2) may they have included. Notification number 9 2/2019 which was there, the same has been now incorporated in the act and it has been named as section number 10(2)(a). Section number 10(3), 10(4) and 10(5) has just been amended to include a reference to section number 10(2)(a). That's all, sir. 2 explanations are inserted in section number 10 which have gone ahead and told. Number 1, what are the explanation telling? Explanation number 1 is telling when you are checking this year ke liye eligibility, you will see last year ka aggregate turnover. In your last year ka aggregate turnover, include supplies from 1st April up to the year end, but don't include interest and discount. Okay, sir. And this year when you are paying the tax, if it's your first year of operation up to the date of becoming liable, listen to me very carefully, up to the date of becoming liable, whatever is your turnover, on that anyways you will not pay GST. After the day you become liable, whatever is your turnover, on that you will have to pay GST. Tell me one thing, sir. Sir, if I am already registered in the last year, then also this year I will see. No, Baba. only in the first year of operation you will exclude 1st April up to the date of becoming liable. If you are already registered under composition in the last year, then this year though from first date only. If earlier year May, last year May you are already registered under composition, then this year when you are paying tax, you will pay tax under composition from 1st April to year end. There is no change. What you have to understand, if it's your first year of operation, then till the date you become liable for registration, you don't have to pay any GST. But once you become liable till the year end, if you have taken composition till the year end, pay whatever supplies is there, you will have to pay tax at composition rate, but always exclude interest and discount. Here we are done with your composition scheme ka amendments, right everyone? Baba, small amendments, not very crucial, but from exam point of view, section number 10 to A and these two explanations which I have gone ahead and explained you are very important. Here we are done with your amendment for composition. Composition ka amendments are done. Now we will go ahead and start with your next amendment. The next amendment is charge of GST. Baba, do you guys remember? I will go ahead and first explain and then we'll go ahead and read what is written. Okay, everyone over here. Do you guys remember, Baba, this amendment was already there. This amendment was already there earlier. I had gone ahead and already explained you earlier also. Earlier this amendment was already there. Not amendment. Earlier this reverse charge ka entry was there. Sir, what is reverse charge under section number 9.3? I hope you guys already remember. Let's quickly revise. Sir, if one person, sorry, I'm still in the last year. Sir, if one person is going ahead and supplying services to another person, the recipient will be liable to pay tax, that is known as reverse charge. So there are some notified goods and service on which the recipient is liable to pay the tax as if the recipient is the person. Baba, recipient will be liable to pay the tax. All the provisions will be applicable to the recipient as if he is the person liable to pay tax with respect to those supplies. Are we clear? Yes, sir. So, Baba, in this, there was, so if there is a supplier, he's gone ahead and provided services to a recipient. There are some notified goods and also services on which government have told all the provision of the act will be applicable to the recipient and recipient will be liable to pay tax under reverse charge mechanism. Everyone listen, generally I pay the tax to the supplier, supplier pays to the government, but here government is telling supplier will not pay because it is difficult to collect from the supplier. When is it difficult to collect from the supplier? Basically whenever the supplier is unorganized or the supplier is unorganized or Baba, the supplier is a small person. Government saw that whenever you can't collect from the supplier, government told recipient will catch your neck. You will be liable to comply with all the provisions of the act. And for some goods and services where government knew administratively it will be difficult to collect from the supplier, government went ahead and told recipient you will be liable to pay the tax under reverse charge mechanism. Let's understand, Baba, this we have already understood. Here there was an entry. I will tell you, listen to me very carefully. There is one supplier. He is going ahead and supplying renting of motor vehicle. He is into renting of motor vehicle, and Baba, there is a recipient. Everyone listen to me very carefully. Don't think about reverse charge. Don't think about reverse charge. First think one thing. Government have told if there is a supplier who is into the business of renting of motor vehicle, suppliers were given two options. Everyone listen. There is two kinds of suppliers which are given. Number one, everyone over here. If you are a supplier who is opting for an option of 12%, sir, I will give rent motor vehicle on rent. I am a supplier. I will give motor vehicle on rent and I will charge 12%. 12% GST. Then government went ahead and told, okay supplier, charge 12% GST, issue your invoice, charge 12% GST, you will get full ITC. Full ITC. I am explaining you the amendment. Before explaining the amendment, I am telling you basics. Everyone listen. So if there is a supplier who has gone ahead and given renting of motor vehicle, where basically I have gone ahead and given my motor vehicle on rent, and whatever I am collecting, no, that fare which I am collecting from that person that amount is inclusive of fuel cost. Are we clear? I have given my motor vehicle on rent where what I am charging is inclusive of the fuel cost. Okay, sir. So I will be given full ITC. Whatever I buy, I'll get full ITC. And Baba, I am into the business of renting a motor vehicle. There is no problem at all. Government saw that if you are a supplier who is into the business of renting a motor vehicle, government gave one more option. That Baba, if you are a small person, you can go ahead and give your motor vehicle on rent and charge a GST of just 5%. 5% GST you can charge. But here, you will not get full ITC, you will get limited ITC. Limited ITC means you will get ITC of only similar line of business. Basically, if I am a person who is giving motor vehicle on rent, I will take motor vehicle on rent and give motor vehicle on rent, only that ITC I will get. If I am a person, listen to me very carefully, I am a person who is into renting a motor vehicle, I am given two options. Either I can charge 12%. Sir, charge 12%, take full ITC, no problem at all. Charge 12, take full ITC, no problem. But if I am going ahead under the option of 5%, Baba, I am not talking reverse charge now, I am talking normally only. Normally, I will charge 5%. I will not get any ITC. Only one ITC I will get. Whatever input services I am taking for similar line of business, means I am into the business of renting a motor vehicle. If I take motor vehicle on rent, on that whatever GST is charged, I will get ITC, otherwise no more ITC I will get. Are we clear? Here there was never a question of reverse charge. Why, sir? Because always the suppliers used to go ahead and charge GST at the rate of 12% and they used to take ITC. Reverse charge mechanism is launched over here. Now, where reverse charge? No, sir. Generally, it is 5% forward charge only. But only in one scenario, they have gone ahead and told reverse charge. That scenario will be understanding now. Tell me one thing. When does government launch reverse charge? Government launches reverse charge when this person who is supplying is a small person. This person who is taking service is a big person and catching his neck is easy. Recipient ka neck to catch is easy, then only government launches reverse charge. Yes or no? So government have gone ahead and told, listen to me very carefully, whenever in your exam you see that a person is going ahead and renting motor vehicle and he is charging 12%, never reverse charge will come. Baba, always forward charge mechanism. Here also forward charge mechanism is only there. I am a supplier who has opted for 5%. I will always charge 5%. But only in one scenario, reverse charge mechanism will come. When? Listen to me very carefully here. Services by way of, Baba, earlier there was some ambiguity which was there in this reverse charge ka entry number 15. Now the ambiguity has been removed. That's all. They have redrafted it to remove ambiguity. Are we clear? Yes, sir. Services by way of renting a motor vehicle designed to carry passenger. I am going ahead. Supposingly there is KPMG. I am a person who has a car. I give my car to KPMG on rent. Designed to carry passenger, not to goods. Not to carry goods. It is only designed to carry passenger. So if I am renting a motor vehicle which is designed to carry goods, this will not apply. Passenger, where the cost of fuel is included in the consideration charge for the service provider from the service recipient. Sir, I am going ahead and giving one person ko motor vehicle. I have this car. A car I have given on rent, and Baba, whatever he is paying me, consideration includes fuel cost. I am telling him, sir, per month you will have to pay me 10,000 rupees including fuel. So, sir, I have gone ahead and given services by way of renting a motor vehicle which is designed to carry passenger, where the cost of the fuel is included in the consideration charge from the service recipient. From him, whatever I am charging, that includes fuel cost also. And reverse charge will come only when it is provided to a body corporate. Everyone over here, any person other than body corporate. Service provider is who? Any person other than body corporate. So Baba, listen to me very carefully. This option can be availed by any person, body corporate, non-body corporate, whoever. But reverse charge will come where? We are understanding that now. Are we clear? Reverse charge they are telling. So sir, listen to me very carefully. I am going into the business of renting a motor vehicle. I am a company. Think, I am a company. I have two options. Either to charge 12%. If I charge 12%, full ITC I will get, no problem. If I am going ahead with 5%, I'll get only limited ITC, which is if I take any motor vehicle on rent and give it on rent, I will charge 5%. I will charge under forward charge 5%, but I'll get ITC only of which one? Same line of business. Means if I take motor vehicle on rent, only that ITC I will get. Otherwise, no ITC. Are we clear? Any person, listen to me very carefully, sir. Any person, if he is going ahead and giving motor vehicle on rent when he is charging, and which motor vehicle? Passenger motor vehicle, and he is going ahead and charging whatever he is charging, in that fuel cost is included, then Baba, he can charge 12%, take full ITC, no problem. This is normal. If one person is going ahead and giving motor vehicle on rent where he is going ahead and charging 5%, then he will get ITC, but it is limited only to whatever he is taking from similar line of business. Means I take car and give car on rent, then Baba, that car ka ITC I will get. Whatever input services I am taking, basically if I have taken car on rent, then that front person will charge me GST, that ITC I will get. That's all. Are we clear? Now, this can be any person who is doing this business, but reverse charge is not applicable for everyone. Reverse charge is applicable only when any person other than body corporate. So, Baba, we are talking about any person. Let's go ahead and understand. So, there is one person, any person, but he is not a body corporate. He should not be a body corporate. Are we clear? He should not be a body corporate. Okay? Means a company basically. Baba, for body corporate ka definition, you can go ahead and refer to my textbook, right? Yes, sir. I will tell company as of now. Any person other than a body corporate who, earlier these lines were there, now it has been deleted, who supplies the services to a body corporate. So, sir, supplier is not a body corporate. Supplying to recipient, he is a body corporate. Small person, any person other than body corporate means small person. Supplying to big person, corporate means what? Big person. And does not issue an invoice charging CGST at the rate of 6%, means CGST 6, SGST 6 to the service recipient, means he is not issuing tax invoice charging 12%. He is not issuing tax invoice charging 12%, means, what do you mean by this? Either he is not issuing invoice only, or he is issuing an invoice charging 5%. Are we clear? He is not issuing tax invoice charging 12%, means what? Either he is issuing invoice charging okay. So, Baba, they are telling whenever any person other than a corporate, he does not issue an invoice charging 12% to a corporate, only then the corporate will be liable to pay GST under RCM. You have to remember three things over here. Number one, there should be a small person who is not a company. Number two, he is not going ahead and issuing tax invoice at the rate of 12%. He is not charging 12%, because if 12% is there, forward charge. Can I go ahead? And third, recipient is a body corporate. If these three things are satisfied, body corporate will be liable to pay tax under reverse charge. Can I go ahead? Yes, sir. Let's go ahead and understand with the help of an example. Now, everyone listen. Body corporate located in the taxable territory will be liable to pay tax. This clarification which is there is just for your reading. This is the clarification which is just for your reading. I will go ahead and directly read the crux because I have already explained it to you. What are the two rates which are applicable on renting a motor vehicle? There are two rates which are applicable. Number one, 12% forward charge, full ITC, no problem, any one. Second, 5% revert, 5% also forward charge, 5%. Limited ITC. How much limited? Only to same line of business. Okay. But reverse charge is applicable only in one scenario. Supplier is other than body corporate. Supplier is not a body corporate. Does not issue invoice charging 12% from the recipient. He does not issue invoice charging 12%. And sir, supplies the services to a body corporate, means the big person, small person to big person, only reverse charge. Can I go ahead, everyone? Yes, sir. Next. Now you tell me one thing. Everyone tell me one thing. So if I go ahead and tell you, any person other than body corporate, or if I tell you there is a body corporate, two people I am talking about, any person who is not a body corporate, he can be given to any person who is not a body corporate. Small to small, RCM will not come. RCM will not come. Then, sir, if this person is registered, he will charge forward. We are talking only about 5% wala, okay? We are not talking about 12% wala, because 12% wala, whoever it is, he will always charge 12% forward charge, right? Here, reverse charge will not come. Sir, if he is going ahead and provide, so sir, what will he go ahead and charge? He will charge normally. If he is a registered person, he will charge 5% forward charge mechanism. Clear? Sir, if he is an unregistered person, he will not charge. Sir, any person, if he is not a body corporate and providing to a body corporate, then they are telling reverse charge mechanism. Sir, if he is registered, then also reverse charge will come. If he is unregistered, then also reverse charge will come. Reverse charge mechanism at the rate of 5%. Sir, body corporate providing to any person other than body corporate, or providing to body corporate, Baba, always forward charge mechanism. Here the reverse charge is only one scenario. Any person who is not a body corporate, sir, we are talking about the person who is opting for 5%. We are not talking 12% wala, because 12% wala always forward charge. 12% wala is always forward charge. 5% wala is sometime forward charge. Only one scenario may reverse charge. Which is that one scenario? Sir, if you are any person who is other than a body corporate and you are going ahead and renting to a body corporate, government told you are a small person, he is a big person, let him pay under reverse charge mechanism at the rate of 5%. Are we clear, everyone? But listen to me one thing. Sir, if I am any person who has opted for 5%, here I am charging 5% forward charge, here I am charging reverse charge, then Baba, always remember, one thing you always have to remember, that Baba, as soon as you are providing a service under reverse charge, apportionment has to be done of your input services, Baba, because you will get input services ka ITC only of the same line of business. Will you get full ITC of the input services? No, Baba. Here also input services may you will have to remember that, Baba, rule number 42 ka apportionment will come. We will not go ahead and talk about it, but yes, because here it is forward charge. Reverse charge means it is an exempt supply. Section number 17(3). Reverse charge means exempt supply. Apportionment will come. We will not talk about apportionment now, but what I am telling is, when will reverse charge come? For your exam, the most important thing over here is, when will reverse charge come? Sir, first of all, this person has opted for how much? 5%. He is not a body corporate and he is providing to a body corporate. He is opted for how much? 5%, and he is going, then reverse charge mechanism mein body corporate will pay. So sir, can you tell me when will reverse charge come? I'll tell you once again. Listen. He is any person other than body corporate giving renting of motor vehicle, and he is not issuing a tax invoice at the rate of 12%. He is not issuing a tax invoice where he is charging 12%. Might be he is issuing invoice where he is going ahead and showing 12% GST, or he is not issuing invoice, might be he is not registered. Then Baba, we have to see the recipient. If recipient is a body corporate, then recipient will be liable to pay GST under reverse charge at the rate of 5%. That's it. Are we clear? Number one, any person other than body corporate. Number two, he is not issuing tax invoice at the rate of 12%. Number three, he is a body corporate will pay. Let's go ahead and see the example. Ram, a registered person. First condition, any person other than body corporate. Yes sir, he is not a body corporate. Tax invoice at the rate of 5%. It means he is not charging 12%. Very good. Third, he is providing to Shyam an individual. Shyam is not a body corporate. Shyam means individual. No reverse charge. It means what will come, sir? If this person who is providing the service is registered, then forward charge will come. Otherwise, no GST. Can I go ahead? Yes, sir. Sir, registered person. Number one, other than body corporate. Yes. Tax invoice 5% he is charging. He is not charging 12%. Very good. He is providing Shyam Limited. Limited means he is a body corporate. Sir, very good. Number one, any person other than body corporate. Number two, not charging 12%. Yes, sir, he is charging 5%. Number three, body corporate. Then reverse charge mechanism will be applicable. Can I go ahead? Yes, sir. Next. Ram Limited. Number one condition was, number one condition was you have to be any person other than body corporate. Tell me one thing. Supplier is a body corporate. Will reverse charge come? No, sir. No reverse charge. Can I go ahead, everyone? Yes, sir. Next. Ram, an unregistered person. Sir, see here, everyone. Any person other than body corporate can be an unregistered person also. Yes, sir. Next. Does not issue an invoice. Means he does not issue an invoice charging 12%. Means you don't issue an invoice or you charge 5% in issue. Sir, I am an unregistered person. I am not going ahead and issuing. Yes, sir. No problem. Because they told you do not issue an invoice charging 12% means what? Means you might not issue an invoice or might be you are issuing an invoice with 5%. Only then reverse charge. Sir, I am not issuing an invoice. Okay. However, issues commercial invoice. Commercial invoice means unregistered person will not charge GST. He will just issue a commercial bill. Normal. If he is issuing to number one, any person other than body corporate. Ram is not a body corporate. Ram Limited, otherwise I would have told, right? Number two, does not issue an invoice means he is not issuing an invoice charging 12%. Okay. Third, body corporate. Shyam Limited, body corporate, and hence Shyam Limited will be liable to pay GST at the rate of 5% under reverse charge mechanism. Shyam Limited will be liable to pay GST under reverse charge mechanism. Are we clear, everyone? Yes, sir. All the three conditions satisfied. Number 5. Ram, a registered person. Baba, he is not a body corporate because individual ka name I have given. Ram, a registered person. Under composition scheme. Baba, do you remember now under composition scheme? If I am into business of renting a motor vehicle, I am a service provider. Up to 50 lakh, I can take benefit of notification. No. Up to 50 lakh, I can take section number 10 2A ka benefit. Yes, sir. You are issuing bill of supply. Yes, sir. I am not issuing a tax invoice. Are you issuing tax invoice at the rate of 12%? No, sir. I am issuing bill of supply. Okay. And you are issuing to Shyam Limited. Third, number one condition satisfied. You are not a body corporate. Number two, you are not issuing tax invoice at 12%. You are issuing bill of supply. Number three, you are issuing it to a body corporate. Body corporate will be liable to pay tax under reverse charge. That's it, everyone. This is the most question which they can ask you in the exam. I have given all the example, right, everyone? Everyone listen to me very carefully. Remember always one thing. Sir, number one, any person other than body corporate giving to body corporate and Baba, you are not charging 12%, only then body corporate will be liable to pay tax under reverse charge. The same was there earlier also, but there was ambiguity, some confusions were there. So government went ahead and redrafted, and redrafting has been done of the entry by deleting some lines which were there and adding some more line. Are we clear, everyone? Yes, sir, we understood. So for your exam purpose, one line which you will have to remember is number one, any person other than body corporate, he should not be a body corporate. He should not be issuing tax invoice. If he is not issuing tax invoice at the rate 12% means he can issue invoice at the rate of 5%, or might be he can issue bill of supply, or might be he can issue a commercial invoice, whatever it is. But he should not be issuing tax invoice at the rate of 12%. And Baba, if he is going ahead and giving services to a body corporate, then reverse charge mechanism, body corporate will have to pay GST at the rate of 5%. Remember, for your exam, this is the maximum they can go ahead and ask you also. Are we clear, everyone? Yes, sir, we got it. Next. Registration. The amendment is section number 22 subsection 1 May. Baba, I hope you guys already remember that we had gone ahead and learned that the registration limit is now 40 lakh, 20 lakh, 10 lakh. For some state it is 40 For some state it is 20, for some state it is 10. We had already gone ahead and learned that. Now section number 21 may, there is no big amendment which has come, nothing very relevant also. What they have gone ahead and told is, sir, one proviso has been inserted. Baba, listen to me very carefully. Government, see here they are telling every supplier shall be liable to take registration under this act if his aggregate turnover exceeds 20 lakh, right? But then for special category state, they are told the government may, at the request of special category state, enhance the aggregate turnover limit from 20 to not exceeding, from 10 lakh to not exceeding 20 lakh, subject to such limitation. So government had the power that for some special category state, government can increase from 10 lakh to 20 lakh. Sir, because normally registration for a person was 20 lakh. For special category state, it was 10 lakh. Now this 10 lakh can be increased to 20, that power was there. 20 can be increased to 40 lakh rupees, that power with the government was not there under section number 21, and government had gone ahead and used the power under section number 22 to go ahead and exempt people from taking registration up to 40 lakh. See Baba, listen to me very carefully. Government never had the power to make the registration limit from 20 lakh to 40 lakh. Government never had the power to make the registration limit from 20 lakh to 40 lakh. But government had the power under section number 22 to exempt some people from registration, and government had gone ahead and told, if you are a supplier of goods, exclusive supplier of goods, you don't have to take registration up to 40 lakh. You are exempted from registration. See, your limit was not increased from 20 to 40, but you were exempted from registration up to 40 lakh rupees. There's a difference. One is government increasing the registration limit from 20 to 40 is different thing. One is government is telling you are exempted from registration up to 40 lakh. That's a different thing. So Baba, there are two. Effect is same. Effect is you don't have to take registration till 40 lakh. But government never had the power to increase this 20 lakh ka limit to 40 lakh. Now government have the power, and that the power has been given to the government under section number 21, provided that the government may, at the request of a state and on recommendation of the council, this is the amendment part, enhance the aggregate turnover limit from 20 lakh to such amount not exceeding 40 lakh. Means government now has the power that government on recommendation of council can go ahead and increase the limit from 20 to 40. Earlier government never had the power to increase from 20 to 40. Earlier government used the power under section number 22. Do you guys remember? Yes sir, section number 22 gave the power to the government to exempt certain category of person. Government used the power under section number 22 and government exempted people up to 40 lakh rupees. Supplier of goods from registration up to 40 lakh rupees, some people ke liye government went ahead and told that for them, we will exempt them from registration if they are exclusive supplier of goods up to 40 lakh rupees. I hope you guys remember. Yes sir. Sir, next. So it says, the government may at the request of a state and on recommendation of the council enhance the aggregate turnover limit of 20 to such amount not exceeding 40 in case of supplier who is engaged in exclusive supply of goods subject to condition and limitation as may be notified. So Baba, government now, earlier government did not have the power to increase the limit of 20 lakh to 40 lakh. Now government has the power that government can issue a notification and enhance the limit of 20 lakh to 40 lakh. Sir, then how government went ahead and made it 40 lakh now? Baba, government have exempted. See, power to increase threshold limit from 20 to 40 on request of a state on recommendation of the GST Council by notification has now been incorporated under section number 21. However, no notification has been issued using this power. Government have not issued any notification and increased the limit, threshold limit from 20 to 40. Government has not issued any notification. But currently, sir, then currently how people are getting 40 lakh? Baba, currently notification number 10/2019 has been issued under power, using the power under section number 22, and government have not increased 20 to 40. Government have told we are exempting people from registration up to 40 lakh rupees if you are in some states, which I have already told in the class. Baba, if you are in some states, government have not increased the limit, government have exempted you from registration up to 40 lakh rupees. if you are an exclusive supplier of goods. So it says notification number 10/2019 is applicable, which exempts, now exemption has been given, exclusive supplier of goods in some state from registration up to 40 lakh rupees. Are we clear? Yes sir. Sir, can you please tell us the limit? Baba, for your exam purpose, you just have to remember this limit. Registration limit. I have already told you registration limit. Sir, always remember registration limit can be divided into three parts. Number one is M square NT. If you are in Mizoram and Manipur, Nagaland and Tripura, you always have to see if you are a supplier of goods or supplier of goods plus services or supplier of service. Sir, if you are exclusive supplier of goods, then also limit is 10 lakh. If you are supplier of goods plus service or supplier of service, then the limit is 10 lakh. There is no problem. The next is registration limit for other states, which I am telling you now, is PUMAS, PUMAS, PUMAS of Telangana. P for Puducherry, U for Uttarakhand, M for Meghalaya, A for Arunachal Pradesh, S for Sikkim. Baba, always remember, if you are in these states and you are a supplier of goods or supplier of service or supplier of goods plus service, means here also the limit is 20 lakh. Here also the limit is 20 lakh. Huh, sir? Yes, sir. The next one is if you are in the state of Oak of Himachal Pradesh. O for other state. Baba, I am just doing it for a revision. A for Assam, K for Jammu and Kashmir, and H for Himachal Pradesh. Baba, if you are a supplier of goods or you are a supplier of service or supplier of goods plus service. 1 minute everyone, I need some space here. So I'll push it here. Here also the limit is 20 lakh and 20 lakh. But government went ahead and told, if you are in the state of Oak of Himachal Pradesh, government exempted. Baba, listen, government did not increase the limit from 20 to 40. Government exempted those people from registration up to 40 lakh rupees, and hence I had gone ahead and told you that the limit is 40 lakh. And this limit was by using the power under section number 23 to notification number 10/2019 was issued. Are we clear? Yes, sir. Now government have told, if government wants to increase the limit from 20 to 40, government will not require to use the power under section number 23(2). Now government, if one state comes and tells the government has the power under section number 22(1) only to go ahead and increase the limit. Are we clear everyone? Sir, what is currently operational? You tell me. Currently this is only operational. This is only applicable for your exam. The one which you are seeing on the board, you have to write this only, limits. Are we clear everyone? Yes sir. Next, listen to me very carefully. Supplier of goods. Are we clear everyone? Yes sir. Now listen to me very carefully. Number one, what did I tell you? Power with the government and to increase from 20 to 40 has been incorporated in section number 21. Earlier this power was not there with the government. Next. Now, sir, listen to me very carefully everyone. Only supplier of goods के लिए government told, if you are exclusive supplier of goods, only then the limit is 40 lakh. Yes or no? Now tell me one thing. What if I earn little interest income? Baba, even if I am an exclusive supplier of goods, I am selling only goods. I am selling only this stapler. I am selling only stapler, or I am selling only pen. But I am an exclusive supplier of goods. But just imagine, if I have a bank account and I receive interest income, interest is to be included in aggregate turnover. Baba, generally when you read aggregate turnover ka definition, aggregate turnover includes taxable supplies, exempt supplies. Interest income is exempt supply and it is to be included in aggregate turnover. But government told, even if your aggregate turnover has interest income, it will be deemed that you are still a supplier of goods. Interest might be an exempt supply of service. Baba, you are going ahead and given some advance and you have received interest. You have put some money in the bank account and you receive some interest. Although interest is included in the aggregate turnover. But When you are to be told as exclusive supplier of goods, if you receive interest income, Baba, in the country, no one will become exclusive supplier of goods because everyone has interest income. Interest income will be included in aggregate turnover, but still you will be deemed as exclusive supplier of goods. This line has been included. Even if I have, sir, I am a person who is selling this bottle, Baba, water bottle. Okay? Even if I am selling water bottle, I am an exclusive, I might receive some interest. Bottles ka supply 39 lakh rupees, interest income 3 lakh rupees, my aggregate turnover 42 lakh rupees. Yes or no? Yes, Baba. But still, will I get higher limit of 40 lakh? Because only exclusive supplier of goods get higher limit. If I have earned interest, interest is exempt services, I'll not get 40 lakh, I'll get 20 lakh. No, Baba. Government went ahead and told, see, Baba, I have told you, if you are a supplier of goods plus service or goods plus service, you will not get 40 lakh, you will get 20 lakh. Service includes exempt services also. But if you have gone ahead and provided that exempt service where you have received interest and discount, then Baba, they are going ahead and telling, still it will be deemed that you are a supplier of goods and you can take the limit of 40 lakhs. Sir, can you please explain with example? Yes, Baba. See, Ramesh, Ram in Assam. I'm Ramesh. This is Ram. Okay. Ram is in Assam. He is selling goods. Baba, Assam, everyone limit. Assam mein, sir, if you are selling only goods, the limit is 40 lakh. Yes or no? Yes, sir. Sir, I got interest income also. It means my aggregate turnover, this exempt supply of services where you have received interest, 43 lakh. My applicable aggregate, sir, this is a service. This is a service. Sir, exclusive supplier of goods only get 40 lakh. Government went ahead and told Ramesh, listen, even though service is included in your aggregate turnover, it will be deemed that you are still supplier of goods if it is interest income. Interest income will not make you fall from 40 lakh to 20 lakh. That's it. Story closed. So it is telling over here 40 lakh is the applicable turnover limit. Sir, actually if you see interest income is there, it's a service, the limit should be 20 lakh. But Baba, government have clarified that a person shall be considered to be engaged exclusively in supply of goods even if he is engaged in exempt supply of services where consideration is interest or income, interest or discount. So, Baba, if I am a supplier of goods, sir, if I am a supplier of goods, 38 lakh goods I have supplied, interest I have got 5 lakh, government is telling might be your aggregate turnover may you will include it. Your aggregate turnover is 43 lakh, but your limit will not fall to 20 lakh because you are providing service. Your limit will still be 40 lakh because you are going ahead and providing services where you are receiving what? Interest or discount. Baba, interest or discount can never make your limit fall down to, Baba, don't link it to composition. Composition ka discussion, leave it in composition. We are discussing aggregate turnover. Aggregate turnover includes interest and discount. So aggregate turnover is 43 lakh, but still it will be deemed that Ram has supplied 43 lakh goods only. It will be deemed that Ram has supplied 43 lakh goods only. He is not supplying services and he will get a higher limit of 40 lakh. Aggregate turnover shall include interest income, but such income cannot make him, means Ram, ineligible for higher limit of 40 lakh. Ram shall be deemed to be exclusive supplier of goods even if he is engaged in exempt supply of service where consideration is interest or discount. Are we clear? He shall be required registration. Why, sir? Because he has crossed 40 lakh rupees. Can I go ahead? Yes, sir. Next. Sham is in Assam. Sale of goods 38 lakh. Interest income 1 lakh. How much is his aggregate turnover? 39 lakh. Applicable will be 20 lakh or 40 lakh? Sir, applicable will be 40 lakh. Sir, but he is providing service, no? If you are providing service, means your limit will become 20. No, Baba. If you are earning interest or discount, that although might be a service, but you will get a higher limit of 40 lakh. That is the clarification which has come. They are going ahead and telling over here, you will get 40 lakh a limit and hence you will not be required. Sham is not required to take registration since aggregate turnover did not exceed 40 lakh rupees. Are we clear, everyone? Yes, sir. We got it. Can we go ahead? Yes, sir. Let's go ahead. Now, everyone, please remember always, if you are an exclusive supplier of goods, for you the limit is 40 lakh. In that, even if you have gone ahead and received exempt, if you have gone ahead and provided some exempt services where you are receiving what? Interest or discount, then Baba, interest or discount will not make you ineligible for a higher limit of 40 lakh. You will still be eligible to take the higher limit of 40 lakh rupees. Are we clear? Yes, sir. This is one small inclusion which has been done. Explanation has been inserted. Are we clear? Yes, sir. Next. Can I go ahead? Yes, sir. Sir, can you tell me one thing? Baba, listen to me very carefully. If in the same example, I would have gone ahead and told that Ramesh has earned rental income, then will he get, Baba, rental income is also an exempt service. Residential house is an exempt service. Yes, but still now, because it is not an exempt service where he is receiving interest or discount, his aggregate turnover is 43 lakh. Applicable will not be 40, applicable limit will be 20 lakh, because only interest and discount, exempt service where you are receiving interest and discount will not make you ineligible for a 40 lakh limit. All other services will, Baba, any service if you provide, you will never get 40 lakh, you will get 20 lakh only. Only interest and discount will not make you ineligible for a higher limit of 40 lakh. Are we clear, everyone? Yes, sir, we got it. I have gone ahead and told you this, right? Can we go ahead? Yes, sir. Let's go ahead. Next. Now one more new thing has come. Aadhaar authentication. 1 minute. I'll open one screenshot so that I can show it to you. 1 minute. So the next amendment is Aadhaar authentication. Everyone, let's quickly understand why Aadhaar authentication, why this amendment has been brought into. So section number 25, section number 25 of your registration chapter. In section number 25, subsection 6A, 6B, 6C and 6D has been introduced. Now, what is the amendment relating to? Everyone listen to me very carefully. There were suppliers who were there who were actually not existing only. They used to take GST registration and just run off. They will issue invoices and then they are no more. So, Baba, government, in order to control such kind of a activity, that such kind of a people are not there, who are basically fake suppliers, and Baba, they will take registration for some time and then they are gone. So, Baba, government went ahead and told, before giving registration to any person, we want to go ahead and verify the identification of the person, and for verification of the identification of a person, government went ahead and introduced one new change where the government told, we will go ahead and tell people that when you are applying for registration in your part B of GST REG 02, part B of GST REG 01, sorry 01, when you are applying for registration in your part B, government introduced one new tab which is known as Aadhaar authentication. Sir, what is Aadhaar authentication? Nothing, Baba. You just have to put your Aadhaar number. OTP will come in your mobile number. You will have to put the OTP over there and your Aadhaar verification is done. Aadhaar verification is done means your identification has been verified. So, Aadhaar authentication means what? Your identification has been verified. Now, the government will go ahead and grant you the registration and you can operate your business. So, Baba, earlier Aadhaar authentication was not there, but government saw that there are many fake suppliers who are coming into picture. So, government went ahead and told Ramesh, whenever you are applying for registration, do one thing. One new tab has been introduced in GST ka part B of REG 01 registration form which is there. In that, one new tab has been introduced. Just go ahead, say, would you like to verify your Aadhaar? Just put a yes over here. Put your Aadhaar number and your Aadhaar may one number pe, your mobile number pe one OTP will come. Please go ahead and verify the OTP. Basically, the mobile number which you had given when you had taken Aadhaar number, that mobile number pe one OTP will come. Please verify. And once you go ahead and put the Aadhaar OTP which is there, your Aadhaar verification is done. Now they will go ahead and grant you the registration within 3 days. If they don't give you the registration within 3 days, then Baba, deemed registration certificate granted, portal will automatically grant you registration. Do you guys remember? Yes, sir, we remember. That's it, Baba. Everything is same. Now, sir, what if I don't have a Aadhaar number? They have gone ahead and told, if you don't have a Aadhaar number, then Baba, you will be given viable and other means. Other viable means, basically they are telling, if you don't have Aadhaar number, then we'll give you other means of verification. Basically, to verify me whether I am actually a supplier or not a supplier, they are telling we'll give you other means to verify. Basically, there will be other means. What are the other means of verification? They will come to my place of business, do the physical verification of the place of business, identify whether actually Ramesh is doing business from that place of business, only then registration will be granted. Are we clear? Yes, sir. Listen to me very carefully. from the 1st of April 2020, Aadhaar verification has been made mandatory. Basically, you'll have to go online when you are applying for your registration. In case of fresh registration, I am telling, you have to go online, and when you are applying for registration, Baba, you have to put your Aadhaar number, OTP will come, and you have to verify your Aadhaar OTP. It means government is now, GST department also is verifying that this person is not a fake supplier. Now, supposingly, I have not gone ahead and put my Aadhaar OTP, then in that scenario what will happen? The government went ahead and told, we'll give you other means of, basically we'll verify you by other means. How will the government verify me by other means? Government basically, once you apply for registration online, listen everyone, once you apply for registration online, department ka one person will come for the physical verification of the place of your business. So you have to be in your place of business. The officer will come. He will do the physical verification of your place of business, that actually Ramesh is doing business from this place of business, and Baba, only then they will go ahead and grant you the registration certificate. But remember always, once you apply, they will come for the physical verification within the next 60 days. Only once they come, they verify. This officer who does the physical verification of the place of business, he will upload online one GST REG 30 May physical verification report, and only then registration will be granted to you. Here that 3 days may registration granting ka provisions are not applicable. That's it, is the amendment. Let's go ahead and read out from your book now. Are we clear? Yes sir. Sir, what is it? Baba, from 1st of April, if you are going ahead for a new registration, Aadhaar authentication has been made mandatory. Please put your Aadhaar number, OTP will come, verify your Aadhaar OTP, and only then registration will be granted in the next 3 days. If registration is not granted within the next 3 days, Baba, deemed registration certificate, deemed registration granted online, portal will make your registration certificate available. Do you remember? Yes sir. Sir, if I don't have Aadhaar card, then Baba, if you don't have Aadhaar number, then they are telling, officer will come. Once you apply for registration, officer will come to your place of business. He will verify, he will do the physical verification of the place of business in my presence, in the presence of the person who wants registration. And then Baba, once he is verified that okay, this person is not fake person, he will upload one online report. Once he uploads the online report, then only registration shall be granted to me. Here the concept of 3 days may grant of registration is not applicable, because once you apply, they will take 60 days to come and do the physical verification. After physical verification only, they will go ahead and grant you the registration certificate. This is the amendment which has come. Let's go ahead and read. So Baba, section number 25, if you remember section number 25 which was there, in section number 25 subsection 6A has been introduced. Everyone listen, 6A says nothing. 6A says if you are already registered, not new registration. See Baba everyone, section number 25 may, section number 25, 6A, 6B, 6C and 6D, 4 subsections are introduced. What is section number 6A telling? 6A is telling, if you are already existing registered person, if you are already a registered person, every registered person who is there, if you are already registered, then you have to undergo Aadhaar authentication. If you don't go undergo Aadhaar authentication, viable means will be given. Viable means the physical premises ka verification will be done, and you will be able to carry your business. So sir, if I already, listen to me very carefully, if I already have a registration certificate, government is telling still you have to go ahead and online and do Aadhaar authentication. If you don't do Aadhaar authentication, then Baba, officer will come to your place of business and he'll do the physical premises ka verification. Sir, if I don't get the physical premises ka verification also done, then Baba, your registration will be deemed cancelled. See over here, it is telling every registered person shall undergo Aadhaar authentication or furnish proof of Aadhaar number in such form and within such time as may be prescribed, provided that if Aadhaar number is not assigned to the registered person, such person shall be offered alternate and viable means of identification. Basically, what do you mean by alternate mean? The officer will come to a place of business and he will do the physical verification. Provided further that if you don't undergo Aadhaar authentication, are we clear? Or furnish proof of Aadhaar number, or furnish alternate and viable means. Alternate and viable means he came to a place of business. You are telling I am not there, place of business is closed. If you do all those things, then they are telling registration allotted. You are already registered person. 6A talks about already registered person should undergo Aadhaar authentication. So if I am already taken registration, still I have to undergo Aadhaar authentication. And Baba, if I don't undergo registration allotted shall be deemed to be invalid. My registration will be deemed to be invalid, and if I am carrying on business, it will be as if I have not taken registration and I am carrying on business. Penalty provisions will be applicable on me. Other provisions of the Act shall apply as if that person does not have registration. All the other penalty etc provisions will apply to me. Are we clear? Yes sir. But listen to me very carefully. If I am already a registered person, I have to undergo Aadhaar authentication, but in such form and manner and within such time as may be prescribed. Nothing has been prescribed now. So if you are already a registered person, you have to undergo Aadhaar authentication, but from a date government will go ahead and notify, and baba, once the government prescribes, basically government will issue a notification, and from that day you will have to go undergo Aadhaar authentication. As of now, power with the government under section number 25(6)(a) is there, that government can go ahead and issue a notification and tell you that even if you are already a registered person, please undergo Aadhaar authentication. If you don't undergo, then baba, they are telling we'll give you viable means. Viable means basically they will come to your place of business and verify your place of business, but still if that also is not done, then baba, they are telling your registration allotted will be invalid, and baba, all the provision, basically penalty provisions will be applicable on you. Are we clear? But already registered person has to undergo Aadhaar authentication. That power is there with the government, but government have not made it applicable now. Are we clear? So if you are already registered, you have to undergo Aadhaar authentication, but government will go ahead and notify the date and time from when you have to undergo Aadhaar authentication. But sir, what about new registration? Yes baba, section 6b talks about new registration. So sir, if 6b talks about individual, so sir, if you are an individual, baba, please undergo Aadhaar authentication from the 1st of April. Basically government has issued a notification 1st of April 2020, say if you are applying for registration, you have to undergo Aadhaar authentication. If you don't undergo Aadhaar authentication, they are telling no problem, we will come to a place of business, do the physical premises ka verification, and then go ahead and give you registration. Are we clear? But sir, if I give Aadhaar card, baba, basically when you are applying now, no, for registration, do your Aadhaar verification. They are telling if you go ahead and do your Aadhaar verification, very good. If you don't do your Aadhaar verification, they are telling we will come to your place of business, we will come to your place of business, do the physical verification of the place of business, your identity will be verified, only then registration will be granted. Otherwise registration only will not be granted. Are we clear everyone? Yes sir. 6a told about already registered person. If you are already registered person, your Aadhaar authentication has to be done, or basically your verification, your identification will be verified. They will come to a place of business, do the physical premises ka business ka physical place of business ka verification, and baba, your identification will be verified. But this will be done from a date which will be notified and in such form which will be notified by the government. 6b says that individual has to undergo Aadhaar authentication. If you undergo Aadhaar authentication, very good, your registration will be given in. Every individual, in order to be grant of registration, undergo authentication or furnish proof of Aadhaar. Sir, if you go ahead and give your Aadhaar, do your Aadhaar authentication, then registration will be granted to you in 3 days. But sir, if I don't do, then they are telling over here, we will give you alternate means, and alternate means is nothing other than they will come to your place of business, do the physical verification of your place of business, and then give you the registration. Okay sir, notification has been issued, and from 1st of April this notification is valid. Every individual who is going online and applying for registration has to undergo Aadhaar verification. Okay sir. 6c talks about others. 6c talks about others now. So what is 6c talking? 6c says other than individual, others also has to undergo Aadhaar authentication. But sir, under this government have gone ahead and issued a notification, and government have told who are the people other than individuals who have to undergo Aadhaar authentication, and government have told authorized signatory. So baba, 6c says under 6c other than individual who has to undergo Aadhaar authentication. Sir, listen to me very carefully. Here they have gone ahead and told, see, every person other than individual shall, in order to be grant of registration, otherwise registration only will not be granted, undergo authentication or furnish proof of Aadhaar number of Karta. Baba, Hindu undivided, HUF ka case mein, HUF ka case mein Karta ka, see, Hindu undivided family, HUF will not have a Aadhaar number, Karta will have a Aadhaar number. Karta ka Aadhaar authentication has to be done. Company ka case mein, they are telling managing director ka Aadhaar authentication has to be done. Sir, whole time director is there, whole time director ka Aadhaar. Baba, company will not have an Aadhaar number, director will have an Aadhaar number, no. So the whole time director ka Aadhaar number should be put and verification has to be done. Partners ka case mein, baba, partnership firm doesn't have an Aadhaar number, partners will have an Aadhaar number, that Aadhaar ka verification has to be done. Trustees, members of managing committee of association, board of trustees, authorized representative, authorized signatory, such other class of person as may be notified by the government, and government have gone ahead and notified three people who has to undergo Aadhaar authentication. Number one, if you are authorized signatory. So sir, who has to undergo? Authorized signatory. Baba, you have been authorized as an authorized signatory to go ahead and file your GST returns basically. So the authorized signatory of all types have to undergo Aadhaar authentication. Company can't undergo Aadhaar authentication. Company का case में generally managing director is the authorized signatory. Managing director will undergo Aadhaar authentication. Are we clear, everyone? Yes, sir. Next, they are telling managing and authorized partner has to undergo Aadhaar authentication. Are we clear? Then they are telling Karta in case of HUF has to undergo Aadhaar authentication. So Baba, 6B says if you are going for any, 6A talks about already registered person has to undergo Aadhaar authentication. If you don't undergo Aadhaar authentication, then Baba physical premises ka verification will be done. Physical premises ka verification also not done, then they are telling your registration will be invalid, but this is not operational now. Next, 6B says if you are going for a fresh registration, then they are telling if you are an individual, will do Aadhaar authentication, and if Aadhaar authentication is not done, then Baba physical premises ka verification will be done, only then registration will be granted. 6C talks about other than individual who are required Aadhaar authentication. Number one, authorized signatory of all type, managing and authorized partner of a partnership firm. Basically, sir, managing and authorized partners, Karta of an HUF, these people have to undergo Aadhaar authentication from 1st of April 2020. Are we clear, everyone? Yes, sir. 6D talks about who does not have to undergo Aadhaar authentication. Let's see. Sir, 6D talks about, section number 6D talks about who are the people who don't have to undergo Aadhaar authentication. They are telling, sir, we will go ahead and issue a notification, and notification has been issued using the power under 6D, and government have gone ahead and told that, sir, if you are not an Indian citizen, a person who is not a citizen of India, not a citizen, you are not a citizen of India, Indian citizen. Sir, I am not an Indian citizen only. From where will I get Aadhaar? So, Baba, you are not required registration. No. You are not required Aadhaar authentication. Registration is required if you want to do business, but Aadhaar authentication will not be done. Next, sir, if you are a person other than IAMK, sir, if you are a person other than individual, because individual is required. A for authorized signatory of all types are required. M for managing. See, IAMK. Other than IAMK, if you are not IAMK, K means Karta. If you are not IAMK, then Baba, you are not required. Aadhaar authentication is not required. Are we clear, everyone? Yes, sir, we got it. We spoke about 4 people. Section number 25. Everyone with me. Section number 25 had section number 25A, section number 25B, section number 25C, section number 25D. Sir, section number 25. Do you remember? Yes, sir. Section number 25 spoke about the procedure for registration. Yes, sir. Section number 25 may they have gone ahead and told, section number 25 6A told, if you are already a registered person, please undergo Aadhaar authentication, but it will be in such form and manner as may be prescribed. Nothing has been prescribed. So, sorry, if you are already a registered person, you have to undergo Aadhaar authentication, but as of now, you don't have to undergo because nothing has been prescribed. 6B talks about and 6C talks about new registration from 1st of April. You have to undergo Aadhaar authentication. Who has to undergo 6B told individual has to undergo Aadhaar authentication. 6C told AMK. A for authorized signatory of all type, M for managing and authorized partner, K for Karta has to undergo Aadhaar authentication. Are we clear, everyone? Yes, sir. Sir, from when? From 1st of April. 6D told who does not have to undergo, very, very, very important, 6A, 6B, 6C, 6D. Who does not have to undergo, sir, who is not an Indian citizen, and Baba, who is not IAMK. I for individual, M for authorized signatory of all time, M for managing and authorized partner, K for Karta. Other than these people, anyone who is there, they don't have to undergo. Other than IAMK does not have to undergo Aadhaar authentication. Got it, sir? Yes, sir. Listen to me very carefully. How will you do Aadhaar authentication? Go online. Put over here your Aadhaar number, OTP will come, verify your OTP and Aadhaar authentication is done. Sir, if I don't do Aadhaar authentication, if you don't have an Aadhaar number, they are telling we'll give you viable and other means. What is viable and other means? Baba, nothing. They will go ahead and tell you that basically, sir, if you do Aadhaar authentication, now listen to me very carefully. If you do Aadhaar authentication, within 3 days, your registration certificate will be granted. If they don't grant registration certificate within 3 days, auto approval of registration will be done by the portal. Do you know? Yes, sir. But sir, if I don't do Aadhaar verification, they are telling once you apply for registration, officer will come within 60 days. Once officer does the physical premises ka verification, only then registration shall be granted to you. only then registration certificate shall be granted to you. This 3 days ka concept, that sir, if officer did not reply within 3 days, or if officer did not reply, I gave clarification, officer did not reply within 7 days, baba, auto approval will be done. Auto approval will never be done if you don't do Aadhaar authentication. Registration will be granted only after he comes and does the physical verification of the place of business. Are we clear, everyone? Yes, sir. Baba, that's it, is the amendment. This rule 8, rule number 9 and rule number 25 may also consequential change has been done. Whatever I have explained, the same thing has been now inserted in rule number 8, rule number 9 and rule number 25. Are we clear, everyone? Yes, sir. See, sir, the amendment material which you have, might be you will see over there that rule is written over here. It was a mistake where rule I had written, it will be section. Okay, everyone. So if you by chance have the amendment material with you, where rule is written, baba, cut it and write section. Okay, this all 4 might have been written rule there. So it will be section number 25, section number 25 A, B, C, D. Are we clear, everyone? Yes, sir. Sir, section. What is the crux? You guys can read the crux now. You will be able to understand very easily. See over here. It says Aadhaar authentication has been made mandatory. If you don't undergo Aadhaar authentication, then your physical premises verification will be done. Only then registration will be granted. 6.8 talks about already registered person. They already have registration certificate. There also Aadhaar authentication has to be done, but from a date which will be prescribed later. 6B, 6C talks about. 6B talks about new registration may individual has to undergo. New registration may, sir, this also is new. 6C is also new registration only. New registration may authorized signatory of all time managing and authorized partner, and sir, Karta has to undergo Aadhaar authentication. Sir, 6D talks about who are the people who don't have to undergo Aadhaar authentication. Notification is issued where government have gone ahead and told that, sir, if you are not an Indian citizen or you are other than IAMK, then you don't have to undergo Aadhaar authentication. Sir, if Aadhaar authentication is, if Aadhaar is not assigned, I don't have Aadhaar number, baba, you can get registration, but after you apply, they will come for physical verification of your place of business, and baba, only then they will go ahead and give you. Basically, they will come do the physical verification of your place of business. One online में GST REG 30 physical verification का report will be uploaded by the officer. Only then your registration will be granted by your officer. Are we clear? Once you apply for registration, one officer will come. He will do the physical verification of your place of business. He will upload online one survey report. That survey report, after your officer sees, only then the officer will grant you the registration. Here, that 3 days or 7 days deemed approval wala concept will not apply. That's all has been told in the Aadhaar ka amendment. Are we clear, everyone? Yes, sir. Can we go ahead? Let's go ahead. Next. So, sir, rule number 8 and rule number 9 is nothing other than consequential amendment because of this Aadhaar authentication. Rule number 8 and rule number 9 may also little changes made, which I have explained you. Baba, rule number 25, nothing. Rule number 25 earlier used to say physical verification of the premises. Rule number 25 earlier it used to say physical verification of the premises can be done only after registration certificate has been granted. If they have any doubt, they can do the physical verification. Now, Baba, rule number 25 they have told physical verification of the premises can be done prior also if you don't furnish Aadhaar. Are we clear? That is told in rule number 25. The amendment is earlier physical verification of the premises of your premises can be done only after grant of registration. Now physical premises verification can be done prior to grant also if you have not furnished your Aadhaar number. Basically, Aadhaar authentication is not done. Can I go ahead, everyone? Yes, sir, we got it. Now the next amendment is exemption from GST. Everyone listen to me very carefully. I would like to go ahead and explain it like this. Everyone over here. Now, they are talking about one exemption. One small change has come in an exemption. Not very important from exam point of view, but still we'll discuss. Everyone over here. Services of lease. Services of lease. Basically, if someone is giving on lease, who is giving on lease? What is he giving on lease? Let's go ahead and understand from our crux. So, Baba, there is, first of all, there is a lessor. Always in a lease, there will be a lessor. There will be a lessee. Lessor will go ahead and give something on lease, and Baba, he will go ahead and pay. Two things are paid always. Upfront amount means one lump sum, and one periodic rent. Rentals, periodic rentals are paid. Always remember, in case of lease, there are 4 things which are there. One will be a lessor, one will be a lessee. I am going ahead and telling you the amendment shortcut mein, then you can read the book. The what will be, there will be something which will be given on lease, and baba upfront amount will be received. What will be the consideration? Consideration will be upfront amount, and baba rent also. So let's go ahead and understand what are they telling. Who is the lessor? Who is the lessee? What is exempted? Let's go ahead and read. Lessor, state government industrial development corporation or undertaking. So baba, who is the lessor? State government industrial development corporation or undertaking, or baba, or any other entity having 20% or more ownership of state government, or any other entity where earlier, you know, the amendment, earlier this was 50%. The amendment is it has been made 20% now. Any other entity having 20% or more ownership of government, basically central government, state government or union territory government. Are we clear, everyone? So basically, who is the lessor? Sir, the lessor is state government industrial development corporation or undertaking or any other entity where government holds 50% share. Earlier it was 50% ownership is of the government. Now baba, they are telling even if 20% ownership is of the government, basically they are trying to move towards more privatization. We will not go ahead and discuss that. Earlier they had told if 50% or more ownership is of the government and government is giving a land on lease. Are we clear? They were talking about 50% ownership. Now they are telling even if 20% ownership is of the government, okay, and they are giving on lease. What they are giving on lease? Long-term lease. Basically they are giving long-term lease. Long-term lease. Long-term lease means which is actually greater than equal to at least 30 years. Okay. Long-term lease pay what they are giving? Of more of industrial plot. They are giving lease of industrial plot or plots for development of infrastructure for financial business. Plots for development of infrastructure for financial business. Infra for financial business. Are we clear? So baba, who is giving on lease? First of all, lessor is the state government industrial development corporation or baba any other entity which where government is having more than 20% share. They are going ahead and giving on lease. What lease? Long-term lease of greater than equal to 30 years. What are they giving on lease? They are giving industrial plot on lease, okay, or they are giving any plot for development of financial business. So there is a developer who will go ahead and develop financial business. For him they are giving plots for development of financial business. Okay. Lessee, who is the lessee? The lessee is the industrial unit. So industrial plot is basically given to whom? Industrial. Lessee is industrial unit. So there is an industrial unit who wants to set up an industrial unit, and industrial plot has been given, okay, to him on lease, or it is given to a developer in any industrial or financial area, business area. Developer in any industrial or financial, in any industrial or financial business area. Okay. Then they are telling what will be exempted. Basically upfront amount payable in respect. Baba, whatever is the upfront amount is there, this will be exempt. Basically I'll explain you now. Listen to me very carefully. So what are we telling over here? We are telling there is a lessor. Lessor means a person who is giving long-term lease of what? Baba, he is going ahead and giving. So who is the lessor? Baba, lessor means who are the lessors who will give? Not you as a lessor. State government, industrial development corporation or state government ka undertaking is there, or any other entity where basically 20% or more share is with the government, and they are going ahead and giving what? Long-term lease which is more than equal to 30 years of what? What are they giving on lease? Industrial plot or plots for development of financial business. Basically they are giving plot so that industrial units can go ahead and develop themselves, or baba basically industrial plot for industrial unit, or baba plots for development of financial business they are giving to a developer who will go ahead and develop financial business in that area. So they are giving plots. State government is giving plot to whom? To a person who will develop financial business there. Okay, to an industrial unit or developer in any industrial or financial area. So he is a developer who will develop financial business there. So state government, if they want that Baba this area mein financial business has to be developed, they can go ahead and give one land to the lessee, and lessee can go ahead and develop financial business there. Okay, basically they will make infrastructure over there so that financial business ka growth can happen. Okay, now this lessee will have to go ahead and pay two things. Whoever is taken on lease, he will have to go ahead and pay one lump sum amount to them, because giving something on lease is a service. For this service they are going to receive upfront amount. This upfront amount pe GST has been exempted. That's it everyone. Now and Baba, they will also go ahead and pay, periodic rent. Periodic rent is not exempt. Not exempt. It is not exempt. So I can go ahead and say periodic rents are taxable. Okay everyone, periodic rent is taxable. Monthly rent which will be given will be taxable. That's it everyone. If you want, you can copy it down. Now listen to me very carefully. Amendment is earlier only when one entity which was where central government or government had 50% or share, 50% or more, 50% or more was giving industrial plot or plot for development of infrastructure in financial business, then only it was exempt. But now they are telling even if one entity is there where government is holding only 20% and they are giving an industrial plot or plot for development of financial business, that will also be exempt. Earlier this was 50%, amendment it has been made 20%. Are we clear? Yes sir. Listen to me very carefully. This exemption which is there, it is subject to condition. That Baba, listen to me very carefully. You should always use the industrial plot for whatever it is given. If you go ahead and use it for any other work, if you go ahead and subsequently change the use, it was given to you for developing financial business. If you go ahead and change the use, then they are telling whatever the exempt portion was there, that will become taxable. So state government should monitor that this is actually used by the lessee. Baba, listen, the lessee is actually using it for industrial unit, or Baba, the lessee is actually using it for financial business ka development. Means the developer who is developing financial business in that area. It should not be any other use. If it is any other use, state government should monitor, and the amount should be amount of GST which was exempted will become taxable. Are we clear everyone? Okay. One more thing which has been told is, if lessee goes ahead and gives it on sublease, then Baba, when you give it on sublease, know that sublease ka person, when you are giving on sublease ka agreement mein, please go ahead and specify Baba, when this person is going ahead and giving it on sublease, can happen or not? Lessee can go ahead and give it on sublease. When you are giving it on sublease, you should specify over there that, sir, when I had taken it on lease, it was exempted and I was required to develop financial business in this area. So when I am giving it on you on sublease, you should also go ahead and follow the terms and condition on which government has given me this land. Government had given me this land to develop financial business in this area. If I am giving you on sublease, you should also develop financial business in this land. Are we clear everyone? That's all has been told. And Baba, this is, you can pause and copy it down. Now listen to me very carefully. This is what has been written over here. I have given one crux. Sir, who is the lessor? State government, industrial development corporation or undertaking or any other entity. Earlier it was 50%, now 20% is the government. Then Baba, if it is giving on lease, long-term lease for financial business development or Baba to an industrial area, industrial plot, then they are telling condition is that then upfront amount will be exempt. Okay, condition is lease plot shall be used for the purpose for which they are allotted. Baba, it was allotted to whom? For development of financial business area. Baba, in that area you should develop financial business. Use it for development of financial business. If you go ahead and don't use it for that purpose why it was given, then they are telling exemption shall be withdrawn. Okay, that is for industrial or financial activity in industrial or financial business area. Baba, it should be basically industrial unit means industrial development should happen or financial business should grow in that area. Any other use means the exemption shall be withdrawn. Okay, next, state government shall monitor whichever state may that land has been given, that state government should monitor that the use has been as per the order. Okay, sir, in case any violation in subsequent change, the original lessor, the original lessee and any subsequent lessee or buyer shall jointly and severally be liable to pay the GST. Basically, Here it is telling CGST, under SGST you will see SGST. Basically whatever GST was exempted will become payable. Okay sir. Sir, if you go ahead and lease agreement or sublease agreement or sale agreement, further sublease or sale agreement has happened, then they are telling shall incorporate in the terms and condition the fact that the CGST was exempted subject to the above condition and that the party to the said agreement undertake to comply the same. Means they should go ahead and say that sir, in this land which I am going ahead and giving on sublease, on this land the GST was exempted. It was exempted so that we go ahead and do industrial development over here. Industrial development or Baba financial business is grown. So please go ahead and do that. If you take from me on lease and do something else, then you, me and the lesser, all the three ka neck will be caught and will be liable to pay the GST as applicable, which was for which exemption was given will become payable now. Are we clear? Not very important from exam point of view, but I think this much should be enough, right everyone? Remember always amendment is nothing. Earlier it was 50, now has been made 20. Are we clear? Yes sir, we got it. Let's go ahead everyone. Next, tax invoice ka chapter. Everyone, do you guys remember tax invoice in case of supplier of goods and tax invoice in case of supplier of services? Sir, if I am a supplier of goods, I had to make 3 tax invoice. Everyone, do you remember? Yes sir, I had to make 3 invoice. One is for the king, customer, one is for the transporter, one is for me. Yes or no? So Baba, always remember supplier of goods made 3 invoices. Sir, services ka case mein, Baba, can I transport haircut? I am giving haircut to one person. Can I transport haircut? Not possible. So supplier ka 1 invoice and recipient ka 1 invoice. Basically king, customer ke liye 1 invoice and supplier ke liye 1 invoice in case of services. Now they are telling the serial, now the amendment over here. Amendment is that, sir, nothing. Listen. Government now has the power to notify people who will be required to do invoicing. Who will be required to do what? E-invoicing. Government now has the power to say, hey, this 100 crore wala people whose turnover is more than 100 crore, you have to do e-invoicing. Now, sir, you don't need anything for exam. This is not important for exam also because till 30th of April, no one was notified. Government just got the power that government can go ahead and notify people who will be required to do e-invoicing. What do you mean by e-invoicing? Nothing, Baba. Generate normally. This invoice which you generate, no, normally generate the invoice. Some particulars of the invoice needs to be uploaded online and one invoice reference number has to be generated. Listen to me very carefully. What is e-invoicing? Normally, from your tally, etc. only generate an invoice. From that invoice, one data has to be uploaded online and one invoice reference number has to be generated. Are we clear everyone? This is the concept of e-invoicing. I will not teach you in detail because for your exam it is not applicable. Government just by inserting here rule 48 may government have inserted rule 48 sub rule 4 where government have told the invoice shall be prepared by such class of registered person as may be notified by the government on recommendation of council by including such particular as contained in form GST INV 01. Means they are telling some particulars which you have to, when you are preparing invoice in your tally, no, you have to include some particulars and prepare your invoice, and then that particulars you have to go ahead online, you have to upload and you have to generate an invoice number by uploading information contained therein on the GST common portal. Sir, nothing. Generate your normal invoice, some details upload online. When you upload online, no, one invoice reference number will be generated. Sir, so if I am a person who has been notified by the government, what I have to do? Normal invoice I have to generate, some details I have to upload online and take one invoice reference number. Only if I do that, my invoice will be a valid invoice. Otherwise, my invoice will be an invalid invoice. Sir, in which website should I upload this detail and take the invoice reference number? For that, government have gone ahead and notified this 10 portals which are now known as the GST ka common portal. Baba, common portal, these are also the GST ka portal only, where basically you have to go ahead and upload the details and generate invoice reference number. Now Baba, this invoice reference number you can give it to your EV bill wala, the truck driver. Truck driver did not carry physical invoice. He can carry this invoice reference number. Are you guys able to understand? Later on it will come. Now no, later it will come when new returns will come. Once you upload the invoice reference numbers, you have already uploaded the details. From those details only your returns will automatically get filled. All these things are benefits of invoice reference number. Okay everyone, not applicable for exam. For your exam, you just have to remember now government has the power to notify people who shall be required to generate, who shall be required to do e-invoicing. E-invoicing means, does not mean go online and generate invoice. No, you have to generate normal invoice. Some particulars of the invoice need to be uploaded online. Sir, on which portal we need to upload? So government have notified this 10 portal. That's all you have to remember. What are the portal? E-invoicing 1 gst.gov.in, e-invoicing 2, e-invoice 2 gst.gov.in. All these are the common portal for e-invoicing. Upload the detail, get one invoice reference number. Are we clear? But they are telling this will be effective. Who shall be required to obtain invoice reference number? By obtaining. So government is telling we will go ahead. The invoice shall be prepared by such class of registered person, means e-invoicing shall be done by such class of registered person in such manner and such condition and restriction as may be notified. Are we clear? But as of now, no notification has been issued. Actually, notification was issued and this was made effective for people with turnover more than 100 crore from 1st of April, but then because of Corona came, it was deleted, and now this has been made effective from 1st of October, which is again not applicable for exam, so we will not talk about it. You just have to remember, government now has the power to go ahead and notify people who will be required to do e-invoicing. Every person issuing, every invoice issued under sub-rule 4 applies in any manner other than a manner specified in the sub-rule shall not be treated. Baba, if you go ahead and not upload the details online and you don't generate an invoice reference number, the invoice which you have your invoice shall not be treated as invoice only. That's all. Okay. And Baba, always remember, sub-rule 1 and 2 is not applicable. Basically, whenever e-invoicing has been made mandatory for you, you don't have to generate 3 copies, 2 copies, all these things are not required. Are we clear, everyone? That's all has been told over here. You will not be required to generate 3 copies, 2 copies, etc. You generate only 1 copy, details upload online, take an invoice reference number, that's it. If you take an invoice reference number, your invoice is valid invoice. So Baba, where do I have to upload the details? In all this portal. Okay. Now, so sir, there was a notification which was issued, which was effective from 1st of April, where they had gone ahead and told, if you are a registered person whose turnover is more than 100 crore, whose aggregate turnover is exceeding 100 crore, you will be required to do invoicing. Invoicing was made mandatory for people with turnover more than 100 crore. However, this notification has been deleted and hence new notification is issued, but not applicable for exam. For your exam, what is applicable? Government, on the recommendation of council, now has the power to notify class of registered person who shall be required to obtain invoice reference number by uploading information on the GST common portal. These are the common portal. That's all. Government now has the power that government can tell you whose turnover is more than 100 crore has to go ahead and do e-invoicing. What is invoicing? Nothing. Your invoice ka detail upload online, get one invoice reference number, then only your invoice will be valid. And you don't have to generate 3 invoice, 2 invoice in case of supplier of goods. All these things will not be applicable to you. That's all. E-invoicing ka power. Government now has the power to go ahead and notify people who will be required e-invoicing. That's all. Can I go ahead, everyone? Yes, sir. Next. Baba, your invoice should have a QR code. Government has now the power to go ahead and notify people whose invoice should have QR code. Okay. Government has the power. No notification has been issued yet. Actually, we will not talk about what is issued, etc. For your exam, you will not require anything over here. E-invoicing ka power is there with the government. Government can notify that you will be required e-invoicing. Government has the power that you will be required to put QR code on your invoices. As of now, no one is notified. Okay, everyone? Yes, sir. Section number 31A, government have gone ahead and told that government will go ahead and prescribe that these people will be required to offer e-payment facility to their customers. Facility for digital payment, basically online payment facility has to be offered by you to your customer. Government will notify those people. Prescribed class of registered person shall provide prescribed mode of e-payment. Online mode of payment, you should give Paytm payment, basically to promote digital India. Government is saying we will prescribe those people who will be required to give to their customer e-payment facility. You can use Google Pay, you can use Paytm. Are we clear? All this facility government is telling we will prescribe, and when we prescribe, then you whom we prescribe will be required to go ahead and provide those payment facilities to your customer. This is basically to promote the digital India, right, everyone? But you know what? This e-invoicing, this QR code, and this e-payment facility. Sir, you will be required to generate invoice reference number. You are required. E-invoicing is compulsory. QR code is required, or e-payment facility you should offer to your customer. all these three, government just has the power to notify people. But as of now, for your exam, for November 20 exam, you have to remember that although government has the power to notify people to do invoicing, although government has the power to go ahead and say that you are required QR code in your invoice, although government has the power to say that you are required to offer your customer e-payment facility, but this no notification has been issued yet using this power. For your exam purpose, there is no notification. Are we clear? Government just has the power. Can I go ahead? Yes, sir. E-way bill. Everyone listen to me very carefully. Now government have told that Ramesh, your part A of GST EWB 01, Baba, e-way bill mein suppliers consignor detail will come, where if you are a supplier, your detail has to be put in consignor, or someone is sending to you, he will put your details in the recipient. Everyone listen to me very carefully. When is e-way bill required? Whenever you are sending goods of value more than 50,000 to another person, then you are required to generate e-way bill generally. Then Baba, when you are sending, you have to fill part A or part B. They are telling in part A, you will not be able to fill part A. Your e-way will be blocked. When? I have gone ahead and written the crux, everyone over here. Blocking of e-way bill. Your e-way bill system will be blocked. Basically, you will also not be able to fill part A, or someone who is sending goods to you, your name he will not be able to fill. Are we clear? So it is telling no person including consignor, consignee. If I am sending to someone, my name will come as consignor. If someone say I am receiving, my name will come as consignee. Or Baba, if I have told transporter to generate e-way bill on my behalf, transporter will put my detail. Or I have told Flipkart, Amazon, etc. to generate e-way bill on my behalf. Or Baba, there is a courier agency who is putting my details, basically generating e-way bill in my name. They will not be able to fill the details in the e-way bill if basically my e-way bill system will be blocked if no person shall be allowed to furnish information in part A with respect to a registered person. I will not be able to fill. No one will be able to fill my name in the e-way bill. Basically, for me, e-way bill system will get blocked when I am a composition dealer and I have not furnished CMP 08 for 2 consecutive quarters. Baba, everyone listen to me very carefully. Composition dealer furnishes which return? Sir, registered person can be of two types. Composition dealer, normal registered person. If you are a composition dealer, every 3 months you will have to make the payment CMP 08 mein. Sir, for the month of April, May, June, by 18 July, I have to file CMP 08. July, August, September, I have to fill by 18th October CMP 08. If you don't fill 2 CMP 08s, 2 dates you have missed, you are a composition dealer or a person under notification number 2/2019. Do you remember? But notification number 2/2019 is deleted because you are also a composition dealer now. Everyone listen. When you read over here, no, actually it says being a person under section number 10 or availing benefit of notification number 2/2019. But actually 2/2019 is already gone. Now it is section number 10 2A, right everyone? Yes, sir. So, Baba, if you are a composition dealer and you have not gone ahead and furnished CMP 08 for 2 consecutive quarters, means 1 and 2 quarters together, then gone. Your e-way bill will be blocked. You will not be able to fill your details in e-way bill. No one else will be able to fill your detail in the e-way bill. Are we clear? Yes, sir. Next. Sir, other than CMP, other than composition dealer, if you have not gone ahead and furnished, Baba, normal person, he has to furnish his monthly return, which is GSTR 3B basically, or by any return which is his monthly return under section number 39, he has to furnish GSTR 3B is the general return which is there, right everyone? So Baba, whichever return is there under section number 39 for you, which is your basically monthly return, if you don't go ahead and furnish 2 monthly return, 2 consecutive return basically under section number 39, then has not furnished 2 consecutive return, then your e-way bill will be blocked. Any other person other than A, means normal person again. If now this is also a new addition, okay everyone, this is a new addition which is there. Has not furnished GSTR 1 for any 2 months or quarter. Baba, GSTR 1, which is your outward supplies ka detail. GSTR 1, there are 2 options. One is monthly. Yes or no? And Baba, if your turnover is up to 1.5 crore, then Baba, you can furnish quarterly also GSTR1. Yes or no? So if you have missed two GSTR1, if you have not furnished two GSTR1, or Baba, you have not furnished your quarterly GSTR1 for 2 quarters, then your Baba e-way bill will be blocked. So it says over here, has not furnished GSTR1 for any 2 months. So Baba, whom monthly is applicable, whose turnover is greater than 1.5 crore, for him GSTR1 is monthly. So if you have not furnished 2 months ke liye GSTR1, then Baba, your e-way bill will be blocked. But if your turnover is up to 1.5 crore, then for you GSTR1 is quarterly, and if you have not furnished your quarterly GSTR1 for 2 quarters basically, then your e-way bill will be blocked. Are we clear? Baba, provisions for e-way bill blocking has been introduced. If you don't go ahead and furnish composition dealer CMP08 not furnished for 2 consecutive quarter, together quarter you lapsed payment, then Baba, e-way will block. Sir, if I am a normal person and I have not gone ahead and furnished my monthly return, then Baba, for 2 consecutive quarter, 2 quarters together, then your return will be, then your e-way will system only is blocked for you, right? Then sir, if I am a normal person, now this is a new entry actually. GSTR1 you have not furnished for 2 consecutive. If you are required to furnish monthly GSTR1, 2 GSTR1s you have not furnished. If you are required to furnish quarterly GSTR1, then 2 quarters ke liye GSTR1 you have not furnished, then your e-way bill system will be blocked, right everyone? Yes sir, that's all has been told over here. And they are telling unblocking, now you go tell the commissioner, I'll file my return. Application to the commissioner, you have to give in GST e-way bill 05 if you want unblocking. Commissioner is satisfied that you have filed your return and you have made your payment, etc. Then Baba, he will issue an order in e-way bill 06. Allow registered person that you can now fill your part A of GST EWB 01. Part A, basically part A means part A of GST EWB 01. EWB 01. E-way bill 01. To generate e-way bill, you need e-way bill 01 form, right? Or Baba, he can also reject. Hey, get lost. File your returns and then come. Get lost. Reject the request after providing OBH, opportunity of being heard. Tell me, what do you want to talk? You will talk, he will tell, file your returns and then come again. Right everyone? Yes sir. Sir, e-way bill blocking provision introduced. If I am a composition dealer, 2 consecutive CMP08 not filed, e-way bill blocked. Sir, if I am a normal person, monthly return not filed, e-way bill blocked. Sir, if I am a normal person, statement of outward supply, which is GSTR1. If I am opting for monthly GSTR1, then Baba, 2 GSTR1 I have not filed, e-way will block. But sir, if I have opted for quarterly GSTR1, 2 quarter ka GSTR1 not filed, e-way bill will be blocked. Sir, what can I do if e-way bill is blocked? Apply to the commissioner in e-way bill 05 and he will go ahead and allow you to furnish e-way bill ka detail by, he will pass an order in e-way bill 06 allowing you to furnish the detail. Right sir? Yes sir. Sir, if I have not gone ahead and made the payment, only chumma I have gone ahead and spoken to him, he'll tell, get lost. First make the payment, then come and talk to me, right? He will not allow you. He'll tell you, first file your return. Or Baba, it can also happen that he will tell you what happened, why didn't you file? You will tell, sir, I was sick, COVID mein I was sick. Sir, I was not in the country only, I was stuck in somewhere. I had gone out for a trip and in COVID I got stuck. Because of that, I could not furnish the detail. He will understand and he will allow you to. He will tell, okay, no problem. I know you are a genuine person. In genuine reasons, he will allow you to furnish the detail. He will give an order in EWB 06. Are we clear, everyone? And Baba, or he can go ahead and reject also. But before rejection, he will give you an opportunity of being heard. Are we clear, everyone? Yes, sir. We got it. Next. The next amendment relates to the chapter of input tax credit. Baba, actually, this was an amendment in the previous attempt only, wherein they have gone ahead and made a small change. I hope you guys already remember. I'll go ahead and quickly tell you. Everyone listen to me carefully. This was an amendment which was already in the previous attempt also. However, they have changed the rate. That's all. So let me go ahead and quickly explain. Everyone listen to me carefully. Do you remember when we have to take input tax credit? When we have to take input tax credit, sir, how much is the input tax credit that we can go ahead and avail? Sir, the supplier, I hope you guys already remember, I have taught you already in the earlier attempt the same thing. Now only the rate has changed, so I will not go in detail. Okay, everyone, listen. Supplier will first go ahead and file his GSTR1. Baba, that will come in the recipient ka GSTR2A. Sir, recipient is there. Supplier filed is GSTR1, that came in GSTR2A of the recipient. Supposingly, I have bought goods worth rupees 10 lakh on which I have gone ahead and paid GST of 1 lakh rupees. Baba, everyone listen to me very carefully. I have bought goods worth rupees 10 lakh on which I have paid GST of 1 lakh. Now, suppliers went ahead and showed only invoices worth rupees 8 lakh and 80,000 ka GST. So, it was appearing in my GSTR2A 80,000 ka ITC. So, when I am going ahead and taking input tax credit, Baba, this credit which is coming in my GSTR2A, I can take full credit because this was known as match credit. Whatever he has shown in his GSTR1, that is coming in my GSTR2A, I can take the full credit, 80,000 ka credit. I hope you guys remember. Sir, 2 lakh rupees ka invoices for which 20,000 rupees ka credit is there, it has not been shown by the supplier. Now, relating to this 20,000 ka credit, this credit of 20,000, can you go ahead and take in your GSTR3B? Can you take the input tax credit? They went ahead and told for this 20,000 you can take match credit, which is 80,000 ka 20%. Do you guys remember? 80,000 ka 20% means, sir, relating to this 20,000 which they have not uploaded the invoices, this 20,000 credit is not appearing in my GSTR2A. I can not take 20,000, but I can take of my match credit which they have uploaded the details of this. I can take 20% with respect to invoices for which details have not been uploaded by them. So I can take 20%, which is 16,000 ka credit. So totally I can go ahead and take 96,000 ka credit. Do you guys remember? So when for this I can take 16,000 means total I can take 96,000 ka credit in my GSTR3B. Basically, match credit I can take full. The credit for which invoices have not been uploaded, that credit is not appearing in my GSTR2A. It means it is unmatched. For that 20,000, I can take 20% of 80,000, which is 16,000 rupees only. I hope you guys remember. Now, the change this time is that you can't take 20%, you can take only 10%. It means you can not take 16,000, you can take only 8,000 rupees ka credit. So, sir, 80,000 I can take full because that for that invoices are uploaded. For 20,000 for which invoices are not uploaded, I can take 80,000 ka only 10%. Earlier this was 20, now it has been made as 10%. So amendment is, sir, whatever invoices are uploaded by them, I can take the full credit. Whatever invoices are not uploaded by them, for the invoices which are not uploaded, whatever ITC is there, I cannot take full. But of the invoices which are uploaded, of that I can take 20%. That was earlier. Now this 20 has been made as 10%. So sir, 80,000 ka how much credit you can take? 80,000 ka earlier you could have taken 20%, but now the amendment is you can take only 10%. So you can take only 8,000 rupees ka credit. I hope everyone is clear. Sir, can you please tell once again? Yes, Baba, I would like to tell once again. Listen to me very carefully. There is a supplier and you are a recipient. Baba, supplier will go ahead and file his GSTR1. Supposingly, you had purchased 100 goods, 100 invoices. Baba, 100 invoices are there which supplier should go ahead and upload. You have actually, as a recipient, you have purchased 100 invoices are there with you where the credit is 10 lakh. Okay. Now what happened? Suppliers actually went ahead and showed only 60 invoices. 6 lakh rupees ka credit had been showed by them in GSTR1. This came in your GSTR2. Baba, GSTR2A mein it is showing only 6 lakh ka credit. How much credit you can take? This credit you can take full. Full ITC of 6 lakh can be taken by you. You cannot take full 10 lakh ka credit. No, you cannot take full 10 lakh ka credit. You will take only 6 lakh ka credit now. Sir, what about the remaining credit? Sir, 40 invoices are not uploaded for which 4 lakh ka credit I should have got. This is not uploaded. It means, sir, it is not appearing in my GSTR2A. For this 4 lakh, how much credit I can take? They are telling, sir, whatever credit is appearing, of that 20% you can go ahead and take 1.2 lakh. Basically, I can go ahead and take 1.2 lakh and 6 lakh means 7.2 lakh I can take. But now the change is you can't take 20%. You can take only 10% of the amount which is appearing in your GSTR2A. Hence, I can go ahead and take only 60,000 rupees. So 6 lakh and 60,000 as compared to the earlier one which was 6 lakh plus 1 lakh 20. Are we clear, everyone? That's all is the amendment. This 20% has now been made 10%. Everyone in your book. Sir, always remember, section number 36 told about documentary evidence. Section number 36 sub rule 4 was inserted in the last attempt, where they had gone ahead and told ITC to be availed by registered person in respect of invoices or debit note, the details of which have been uploaded by the supplier under 37(1), basically they have uploaded in GSTR 1, shall not exceed the invoices for which details have not been uploaded. Means for details have not been uploaded with respect to these invoices, 40 invoices of 4 lakh, how much ITC you can take? You can take 10% of the eligible credit. Eligible credit is how much? 6 lakh. Of the eligible credit for 4 lakh, you can take eligible credit, which is 6 lakh ka 10%. 10% means 60,000 only. Sir, in respect of invoices or debit note for which details have been uploaded by the supplier. So, sir, details have been uploaded for 6 lakh. Of 6 lakh, I can take only 10% as compared to the earlier one, which was 20%. That's all is the amendment, everyone. Same thing has been written over here. You guys can read. See, everyone, ITC that can be availed on invoices not uploaded by supplier. Baba, no, invoices not uploaded by supplier means 4 lakh ka invoice, 4 lakh rupees ka invoices are not uploaded. 4 lakh rupees ITC contained in this invoices is 4 lakh. Invoices are not uploaded. Reduced from 20% to 10% of the eligible credit. Earlier it was 20%. Now it has been reduced to 10%. That's all. In respect of invoices and debit note, the details of which have been uploaded by the supplier. So, sir, details uploaded by supplier is 6 lakh. 6 lakh earlier it was 20%. You could have taken 1.2 lakh. It means total ITC you could have taken before this amendment was 7.2 lakh. But now you can take 6 lakh plus 60, 6.6 lakh. Are we clear? You can't take 7.2 lakh. I hope everyone is clear. Yes, sir, we got it. Now, there is a circular which is there. It's just clarificatory in nature. When I was teaching you earlier also, I used to talk about all these things. Baba, all these things are explained by me when I am talking in the class. Now they have gone ahead and issued a circular. Actually, when the circular was issued, these things were already spoken by me in the class. Okay, everyone? Yes, sir. But still, I would like to go ahead and quickly read. You guys can read at home in detail. Right, everyone? Yes, sir. Issue. What are the invoices or debit note on which restriction under section number 36(4) will apply? Baba, restriction under 36(4) will apply only on those invoices and debit note, the details of which have to be uploaded by supplier. Right? For details of which have to be uploaded by supplier in GSTR 1. Everyone listen to me very carefully. In GSTR 1, tax invoice and debit notes are uploaded. On the basis of what are the documents on the basis of which you can take ITC? Baba, you can take ITC on the basis of tax invoice. You can take on the basis of debit note. When you are going ahead and purchasing from outside India, Baba, you will have to go ahead. Listen to me very carefully. When goods come from outside India into India, you will file a bill of entry. In the bill of entry, you pay IGST. This IGST ka credit you can take on the basis of bill of entry. Yes or no? Yes, sir. Baba, these details are never uploaded by the supplier. Supplier will not go ahead and upload bill of entry ka detail. When you import the goods, you file a bill of entry and you clear your goods from the customs station. There you pay IGST. So, Baba, that ITC you can take full. Based on bill of entry, when you import, in case of import of goods, you will go ahead and pay full IGST. Baba, that IGST which you pay on import on the basis of bill of entry, you can take full ITC. Restriction will not apply. Restriction applies only to tax invoice and debit note, on the details of which are to be uploaded by supplier. Details of which are to be uploaded by supplier in GSTR 1. Sir, it says over here, the restriction of availment of ITC is imposed only in respect of tax invoices and debit note, the details of which have to be uploaded by supplier in 37(1), basically the details of which have to be uploaded by supplier in GSTR 1. Sir, what are the documents of which I can take full ITC? This restriction will not apply. Number 1, IGST on import. So, sir, if you go ahead and import goods, you can take ITC on the basis of bill of entry. Sir, bill of entry, which you file under custom. Baba, bill of entry which you file under customs, basically when you file the bill of entry, you pay IGST. That IGST you can take full credit. There is no restriction applicable. Baba, your bill of entry you take on the basis of bill of entry. Why will you upload? Next, sir, if import is of services, when you import services from outside India, that person will never go ahead and file GST return. You will raise a self invoice. You will raise a self invoice, and on the basis of self invoice, you can take full credit. Full credit can be taken by you. You don't have to. Basically, under reverse charge, you have to pay the tax. Baba, you will have to raise a self invoice. You raise a self invoice and take the ITC. You don't have to wait for the supplier, because supplier is outside India. He will not file GSTR1. Can I go ahead? Yes, sir. So, sir, IGST paid on import of goods and service, you can take full credit. Second, document under reverse charge. Baba, supplier is not registered only. Supplier is not registered only. You are paying the tax under reverse charge. You are only paying the tax under reverse charge. Baba, you will first raise a self invoice. On the basis of the self invoice, take full credit. Are we clear? Baba, when you have to pay the tax under reverse charge, you will never wait for the supplier to file GSTR1. In his GSTR1, he will never go ahead and show the document issued under reverse charge. Baba, whenever you are going ahead and raising a self invoice yourself, in that scenario, you can go ahead and take the credit yourself. You don't have to wait for the supplier over there. Are we clear, everyone? Because you are going ahead and raising a self invoice. On the basis of the self invoice, take your credit. Can I go ahead? Yes, sir. Credit received from ISD. Baba, ISD files GSTR 6. ISD files GSTR 6. ISD don't file GSTR 1. So ISD will give you an ISD invoice. On the basis of ISD invoice, you can take the full credit. You don't have to wait. Baba, you don't have to wait for the ISD to go ahead and file the return. Are we clear, everyone? Yes, sir. Next. Whether the said restriction is to be, okay, which are outside the ambit. Basically, sir, you will take, the credit restriction applies only on the tax invoice and debit note which are to be uploaded by supplier. Restriction is not applicable in case of IGST paid on imports of goods or service. Sir, document issued under reverse charge, basically self invoice ka document. Sir, ISD ka credit, ISD will go ahead and raise a tax invoice, ISD invoice to you. Baba, on the basis of ISD invoice, you can take the full credit. ISD files GSTR 6, ISD does not file GSTR 1. So, Baba, in case of ISD invoices, this credit will, this restriction shall not apply. Whether restriction is to be calculated supplier wise or consolidated basis. Baba, you will not see supplier wise, oh, Ram issued 100 rupees, 1 lakh rupees credit came from Ram. With respect to Ram, I can take 1 lakh plus 10,000. No. You have to see monthly consolidated amount. Baba, on the consolidated basis, you will have to see. You will not see supplier wise. For every supplier, the invoice uploaded plus 10%. For every supplier, invoice uploaded per 10%, not applicable. Baba, you can take total credit which is appearing in your GSTR 2A. Of that, you can take additionally 10% with respect to the invoices which are not uploaded. Consolidated basis pay, you will have to see. Next. Sir, GSTR 2A, Baba, people went ahead and asked the government, GSTR 2A is a dynamic document. Sir, they will file GSTR 1. When they file GSTR 1, it will come in our GSTR 2A. Which date ka GSTR 2A we should see? On what day we should see? They file GSTR 1 or 10th. Correct? It will start appearing on 10th only. Sir, if I open my portal on 11th, might be one supplier would have gone ahead and uploaded some detail. Later, might be after 15th, 20th, they will go ahead and upload the details. Sir, when the supplier uploads the detail, then it will start appearing. Which date ka GSTR 2A ka details will have to take. So they went ahead and clarified GSTR 2A being a dynamic document, what would be the amount of input tax credit that is admissible to taxpayer for particular tax period in respect of invoice or debit note whose details have not been uploaded. I have written the crux. The taxpayer may have to ascertain the amount admissible from his auto-populated GSTR 2A as available on the due date. Due date of GSTR 1 is 10th. Baba, they will go ahead and file the return on 10th. It will start appearing on GSTR 2A on 10th. Listen to me very carefully. On 10th, if in your GSTR 2A, it was appearing 6 lakh, take 6 lakh and 6 lakh ka 10%, which is 60,000. You have to see on the date of filing GSTR 1. Might be when you open GSTR 2A on 17th of the month, it was appearing 8 lakh over here. Might be they filed late return and it started appearing. No, you will not go ahead and consider 8 lakh at 10%, 80,000 and 8.8 lakh. No. You will not go ahead and do that. You will have to see GSTR 1 as on the date of filing of GSTR 1. Basically, GSTR 2A, you should see how much is appearing in your GSTR 2A. on the 10th, basically the due date of filing GSTR 1. Can I go ahead? Yes, sir. It says the taxpayer, see over here, the taxpayer may ascertain the amount admissible from his auto-populated GSTR 2A. Baba, GSTR 2A keeps changing. As and when they upload, it will start appearing. So, which date ka GSTR 2A to be taken? GSTR to be taken to A may how much amount is to be taken? That amount you have to see on the date of filing GSTR 1. GSTR 1 ka due date is 10th. You should see on 10th how much is the amount appearing. Are we clear, everyone? Yes, sir. Next, how much ITC a taxpayer can avail in his GSTR 3B in the case the details of some invoices have not been uploaded by the supplier? Sir, you can go ahead and take how much ITC you can take in your GSTR 3B, everyone? Tell me. Sir, whatever credit is appearing in my GSTR 2A, full I can take. In 3B, this is matched credit. This is matched credit. Matched only, no? He uploaded and Baba, I also have the invoice. So, Baba, 6 lakh you can take full. And 6 lakh 10%. How much, everyone? 60,000. So, you can take 6.6 lakh. This I have already explained. Same thing has been done. I have gone ahead and you can go ahead and see over here. The examples are there. Everyone over here. I will go ahead and draw it so that it's quick. All these things you already know, Baba. When it was 20%, I had explained you already this. All these things I had already explained you when it was earlier 20%. Okay, everyone? Listen. Let's go ahead and read the question. It says suppliers furnish GSTR 1 involving credit of 6 lakh. Basically, they have shown 6 lakh. So, it will appear in your GSTR 2A 6 lakh. Correct, everyone? Can you tell me how much ITC we can take? Sir, 6 lakh in 3B, we can take full 6 lakh. Of 6 lakh, we can take 10% with respect to the invoices which are not uploaded. So, sir, everyone listen to me very carefully over here. You see, say R, recipient receives 100 invoices involving 10 lakh. So, sir, recipient, I have actually 100 invoices where the ITC is 10 lakh. Okay. But these people showed only 6 lakh a credit. Okay. Then it says from various suppliers for the month of October, he has to claim ITC in GSTR 3B. How much ITC he can take to be filed by 20th November? Can you tell me how much ITC he can take? So, they have gone ahead and told first, everyone, 6 lakh you can take full. 40 lakh rupees, 4 lakh relating to 40 invoices. These details are not uploaded. What to do? Sir, for these invoices, you can't take 4 lakh, but you can take 6 lakh a 10%, which is 60,000, and hence you can take 6.6 lakh a credit. Okay, everyone? Yes, sir. Next example. These are all examples. 80 invoices of 7 lakh rupees. Sir, 80 invoices uploaded and 7 lakh rupees. So, it will start appearing in my GSTR 2A 7 lakh. Can I take full 7 lakh? Yes, sir. Take 7 lakh full. Sir, 20 invoices of which 3 lakh is the credit. These invoices are not uploaded. What to do? For 3 lakh, how much you can take? 7 lakh a 10%. Sir, 7 lakh a 10% means 70,000. So, I can take 7.7 lakh. Are we clear? 7.7 lakh. Sir, 75 invoices of 9.5 lakh uploaded. Everyone, next one. Can I go ahead? Yes, sir. Let's go ahead. Next, it says 75 invoices are uploaded where 9.5 lakh is the credit. It means 25 invoices where only 50,000 is the credit. These invoices are not uploaded. First, this will come 9.5 lakh. Baba, these are different questions. Okay. So, 9.5 lakh, you can take full 9.5 lakh. Okay, sir. For 50,000, how much you can take? 9.5 lakh 10%, which is how much? 95,000. Baba, in any case, 10 lakh should not exceed. So, 95,000 or 50,000, whichever is lower. So, you can't take, sir, because if you take 95,000, it will become 10 lakh 45,000. Baba, total credit in your invoice is only 10 lakh. How can you take 10 lakh 45? So, they are telling you can't take 95. It will be restricted to 50,000. Which means maximum you can take is 10 lakh. Are we clear, everyone? Yes, sir, we got it. Can I go ahead? The same has been given with the means of an example. Please read at home. When can the balance ITC be claimed in case of availment of ITC is restricted as per the provision? Baba, when can you claim the balance ITC? Listen to me very carefully. Sir, I have taken only 60,000. For 4 lakh, I did not take 3.4 lakh. Because for 4 lakh, I could take only 60,000. What about the remaining 3.4? Baba, remaining you can take when the invoices are uploaded by the supplier. There is no change at all. They are telling the balance ITC may be claimed when the taxpayer in the succeeding months when the details of the requisite invoices are uploaded by the supplier. Are we clear, everyone? Yes, sir. We got it. Can we go ahead? Yes, sir. Baba, this is just for you to read at home. Not very important. This is just an example which has been given. Not important at all. But I'm telling, when can you take the remaining ITC? Remaining ITC can be taken when the invoices are uploaded by them. But as of now, maximum you can take relating to the invoice not uploaded. How much? Sir, of the invoices uploaded, whatever ITC is there, of that 10% can be taken. Can I go ahead? Yes, sir. Let's go ahead. Now, rule number 43. Everyone listen to me very carefully. Rule number 43, manner of ITC apportionment. Do you guys remember? I'll give you a quick briefing. Sir, do you guys remember? Whenever, everyone listen to me very carefully. Whenever you had to go ahead and take, sir, if I have bought something which I am using for my business purpose, I can take full ITC. Sir, if I am going ahead and buying something which I am using for non-business purpose, I cannot take ITC. Sir, if I buy something for making taxable supply, I can take ITC. Sir, if I am buying something which I am using for my exempt supply, I cannot take ITC. Sir, if I am buying something for taxable and exempt both, for taxable as well as exempt, for taxable as well as exempt, then they went ahead and told, if you are using something for taxable and exempt, then you will have to do apportionment. Baba, apportionment, if you guys remember, apportionment means, sir, if I bought something which I am going to use for taxable supply also, exempt supply also, sir, they told apportionment. If you have bought an input or input services which you are going to use for taxable supply also and exempt supply also, then they are telling you will have to do apportionment. Sir, I have gone ahead and used something. You bought some capital goods which I am going to use for taxable supply also and exempt supply also. Then they went ahead and told apportionment has to be done. And if you guys remember, apportionment rule number 42 was there, which told division, right, everyone? And Baba, rule number 43 is also there. Rule number 42, there is no change. You can visit Ramesh Soni, my YouTube channel, where you are watching currently might be. Sir, on my YouTube channel, you can go ahead and visit CA Ramesh Soni. You will find my YouTube channel. There rule number 42 is updated. If you want, you can see there. Okay. Now, rule number 43, there is an amendment. Rule number 43, which was relating to capital goods. Sir, if I bought a machine, everyone, if I bought a machine which I am going to use to make taxable goods also, exempted goods also, they went ahead and told apportionment has to be done. For that machine, whatever credit is there, you can take little credit. You will not be able to take the full credit. Sir, how much credit I'll be able to take? How much credit I'll not be able to take? Can you please go ahead and tell? Everyone listen to me very carefully. In this, what is the change? Everyone listen to me very carefully. I will tell you how this used to work. Sir, in case of capital goods, if you have already seen my video earlier, very good. If you have not gone ahead and seen my rule number 43, see that rule number 43 which is there on my YouTube, and then you can come and see the change. Everyone over here, listen to me very carefully. Sir, I have bought some capital goods which I am going to use for my business purpose. Take full credit. I am going to use for my exclusively non-business. Don't take credit. I have bought some capital goods on which, Baba, this capital goods I have gone ahead and bought on which ITC is blocked. Don't take credit. Sir, I have gone ahead and bought some capital goods which I am going to use for taxable supply. Take credit. Sir, I have bought some capital goods which I am going to use for business and non-business. Listen to me carefully. Business and non-business full. Take the full credit. There is no apportionment for capital goods which are used for business, non-business both. You can take the full credit. Are we clear, everyone? They have not gone ahead and told anything about it. So if you have bought a capital goods which you are going to use for business and non-business, you can take the full credit. Now, the problem comes whenever I bought this asset. Listen to me very carefully. I bought this asset which I am going to use for taxable supply also, and everyone, I am going to use this capital goods for my taxable supply also and exempt supply also. They went ahead and told Ramesh, this machinery ka first take full credit. Then Baba, they went ahead and told, now Ramesh, whatever the credit is there, you have to go ahead and divide it into how many parts? Ramesh, please go ahead and divide it into 60 parts. 60 parts. Are we clear? First, we take the credit. Everyone listen to me very carefully. I am telling over here, I bought an asset for my business purpose. Take the full credit. Sir, I have bought an asset which is for my non-business purpose. Don't take the credit. I have bought an asset which is for my taxable supply, take the credit. I have bought an asset which is for my exempt supply, don't take the credit. Okay. I have bought an asset which is for my business and non-business. Baba, business and non-business ka case mein they have not told apportionment, take the credit, right? For rule number 43, rule number 43 mein non-business purpose, some a capital goods which is used for business and non-business, there is no apportionment, take the credit, enjoy, right everyone? You can enjoy the full credit, there is no problem at all. Now, if I have gone ahead and bought a capital asset, listen to me carefully, which is used for taxable supply, I am going to manufacture taxable goods also, exempted goods also. They told, Ramesh, how much is the taxable goods which you are going to sell every month? You don't know. How much is the taxable goods which you are going to use this capital goods in manufacturing and then selling? You don't know. So Ramesh, first take the full credit, right? First take the full credit. So Baba, you will always take the credit of goods which you are capital goods. We are talking about capital goods ka ITC which you are using for business purpose, taxable supply, business and non-business also full take the credit. Sir, if I am going ahead and using for my exempt supply, listen to me very carefully. If I am using for my exempt supplies, if I am going to use for my exempt supplies, they have gone ahead and told taxable and exempt, taxable and exempt, if I am going to use, they have gone ahead and told Ramesh, first take the credit. Now do one thing, this credit which is there, the credit which is there, divide the credit into how many parts? Sir, divide the credit, don't tear the invoice, I am teaching you, just tear the invoice. Basically divide the credit into how many parts? 60 parts. Are we clear? Now every month you are going to pay back, supposingly this is 1000 rupees ka ITC, 60,000 ka credit I had taken. Now 60,000, 1,111,000 I divided, 1000 rupees which is there, multiplied by exempt turnover divided by total turnover, whatever amount comes. Since I have taken the full credit, total I have already taken, Baba, this much I have to add to my output tax liability with interest. Baba, interest portion is not applicable for, not important for your exam. So I am teaching you first apportionment. Sir, this much credit you will have to go ahead and pay it back reversal. Are we clear everyone? Yes sir, we got it. Baba, listen to me very carefully. Everyone over here, I am telling you over here, sir, you have bought one asset. Supposingly we are on the month of July. In July, I bought an asset which was for non-business purpose. Non-business purpose, ITC will not be given to you. Baba, you should not take the ITC, right? Sir, I have bought an asset which I am going to use for my taxable supply. Take the full ITC. Sir, if I have gone ahead and bought an asset which I am going to use for my exempt supply, I should not take the ITC. Are we clear? Sir, if I have bought an asset which I am using for taxable supply and exempt supply both, they told first take the ITC. Supposingly it is taken 60,000, take the full ITC. Everyone, please listen to me very carefully. First take the full ITC and then they went ahead and told Ramesh, now do one thing. Now this much is done. Now you will have to go ahead and start apportioning. So this will be known as A. A is equal to 60,000. Sir, A you should go ahead and divide. Basically you should go ahead and divide it by 60. Are we clear? Baba, actually over here, no? See, I would like to read your book also. I would like to do this while reading with you the book. Okay, we'll read the book together and then we'll do this. Everyone over here, it says subject to depreciation not been claimed. Basically you should not have taken depreciation on the capital goods. We are reading rule number 43. It says, sir, being partly capital goods, being partly used for business and partly for other purpose, or partly for non-exempt supplies and partly for exempt supplies, shall be attributable to business purpose and for affecting taxable supplies in the following manner. Apportionment, how to do? Everyone listen. They are telling ITC of capital goods exclusively for non-business purpose or for exempt supplies. Sir, non-business and exempt supply. If I am going ahead and buying something for non-business purpose, I bought a capital goods which I am using for non-business purpose, you will never get the ITC, right everyone? Or I am using for exempt supplies, or I am using for exempt supplies, you should go ahead and show it in your GSTR 2A. Baba, GSTR 2 is not there, GSTR 2 is not there, so they are telling just go ahead and show in your GSTR 3B. And ITC shall not be credited to the electronic credit ledger. You will not get the ITC in your electronic credit ledger. Simple. Sir, I have bought an asset for non-business purpose or exempt supply. I will not get the ITC. Simple, they have told. Sir, ITC used for affecting non-exempt supply, basically taxable supply, and exports are known as zero rated, basically zero rated supply. You will get the ITC. They are telling, sir, shall be, you should show in GSTR 2. As of now, GSTR 2 is not there, and form GSTR 3B. So, sir, and ITC will be credited. So, they are telling you have to go ahead and capital goods which you are going ahead and using for taxable supplies, and Baba, which you are using for non-exempt supply, means taxable supplies, basically you should go ahead and take the input tax credit in your GSTR 3B. Take the full ITC. Now, sir, here there is no problem. Here there is no problem. I should take the full ITC. Now, capital goods which you are going ahead and using. Everyone here, capital goods not covered under above should be denoted as A. Means capital goods which you are going ahead and using commonly. Baba, everyone, I can go ahead and name it as capital goods which are going ahead and being used commonly. They are going ahead and telling over here should be denoted as A. Baba, whatever is the ITC should be denoted as A. Supposingly, I went ahead and told the input tax rate is 60,000. Sir, A is 60,000. Are we clear, everyone? Yes, sir, we got it. This is 60,000. Now, being the amount as reflected in the invoice. Sir, you should take the amount as reflected in the invoice, means I should go ahead and see in my invoice whatever is the amount reflected in the invoice, that much credit I should go ahead and put over here and name it as A. Are we clear, everyone? Sir, can we take the ITC? Yes, Baba, you should take this ITC. Okay, everyone? Shall be credited to e-credit ledger, because this should be, this ITC you will get. Are we clear, everyone? This ITC you will get in your e-credit ledger, and now you should name it as A. Okay. Then the validity of the useful life of the asset shall be taken as extended up to 5 years from the date of the invoice for such goods. You should always take the, Baba, for your exam purpose. See, they are telling it shall be extended up to, means you can take a lower amount also, means you can go ahead and take the life as 4 years, 3 years also, but for our exam purpose, we'll take the life as 5 years only. Okay, everyone, shall be taken as 5 years. You will take for your exam purpose the life as 5 years only from the date of the invoice of such goods. So, sir, this capital asset ka life will be taken as 5 years, which is basically 60 months. Okay, sir. Then, Baba, this one you leave it now. Now, the aggregate of A. Supposingly, you have gone ahead and purchased one more capital asset which is being commonly used, one more capital goods which you are going to use it commonly. Then they are telling whatever is the ITC. Supposingly, ITC is 1,20,000. Then they are telling that also you term it as A. Sir, AA ka total, they are telling it should be termed as TC. Sir, what is TC? Total credit over here. I will go ahead and write it over here. 1 minute, everyone. This will be termed as A. A is equal to 60. A is equal to 60. 60, 60. 60 on 1 lakh, 1,80,000. Are we clear, everyone? Yes, sir. 1,80,000. Now they are telling over here, sir, in the respect of the capital goods whose life remains during the tax period, be denoted at TC. This will be known as TC. TC is equal to 1,80,000. Are we clear, everyone? Yes, sir. Next. Sir, now TC should be divided by 60 to get TM. Sir, this TC should be divided by 60, then you will get TM. TM is equal to how much? 1,80,000 divided by 60, you will get 3,000 rupees. 1 lakh, mathematics is very bad. Divided by 60, you will get 3,000 rupees. Baba, now this 3,000 which is there, everyone listen to me very carefully. What did I do till now? I went ahead and told this was a capital goods. Everyone listen. This was a capital goods which are used for non-business purpose and exempt supply. Don't take the ITC. Don't take the ITC. Okay? This was one capital asset which was used for making taxable supply. Take the credit. Take the credit. So this was a capital asset which was used commonly. Baba, first take the credit and name this as A. In the invoice, it is showing 60,000. Right over here, 60,000. Sir, this was a capital asset which was in which the credit is shown as 1,20,000. This also you take as A. Sir, now this 60,000 and 20,000, 1,20,000 is known as TC, and this is 1,80,000. So thus this 1,80,000, now you have to divide it by 60. See, Baba, 1,80,000 ka credit you already took. This, supposing this is 1,80,000, the credit you already took, but were you eligible? No sir, you are not eligible. So they are telling Ramesh you have to pay it back. How much do you have to pay back? They are telling divided by 60. How many? Divided by 60 over here. 3, 4, 5. Like this you have to divide it by 60. And sir, per portion came. How much is per portion coming up? Baba, this credit you have already taken. This 3000 is nothing other than a part of 1,80,000 only, no? So this 3000, supposingly this month I am going to use the machine. When you are using the machine in this month, this 3000 ITC is relating to this month. Sir, monthly credit. How much is the monthly credit? 3000 rupees. Actually, you already took 1,80,000. Already you have taken this 3000, but they are telling this 3000 multiplied by, if your exempt supply ka turnover is 10 lakh, divided by total turnover. Supposing your total turnover 40 lakh is exempt, 10 lakh. Sir, your exempt supply ka turnover is 10 lakh. Your taxable supplies ka turnover is 40 lakh. Your total turnover is how much? 50 lakh. So you just write over here 50 lakh, which is your total turnover. Now you will get, relating to exempt, how much? Sir, 3000 into 10 divided by 50, you will get 600. Baba, this is 600. This 600 should be added to your output tax liability. Are we clear, everyone? Since this is the first month, you will take the credit over here. Everyone listen. You will take the credit on 20th of August. So Baba, 20th of August when you are taking, first you will go ahead and take 1,80,000 and Baba then 600 you should add to your output tax liability. So first month on this 600 you don't have to pay any, interest. Second month onwards you will have to pay. Second month means 2 months ka interest. Third month means 3 months ka interest. Like this you will have to go ahead and pay. Are we clear, everyone? Yes sir, this was just an overview which I have given of the previous. This is not about the change. Everyone listen to me carefully. What am I telling? I am telling, sir, if I am talking about July month, in July month, if you have bought an asset which is for non-business purpose or exempt supply, ITC don't take. Sir, if you have bought for taxable supply, take the input tax credit. If you have bought for taxable supply and exempt supply both, basically common use, then they went ahead and told full ITC you should take. Are we clear? Full ITC you should take. Supposingly it is 60,000. Baba, this will be known as A. If there is any other A, okay, any other commonly used capital asset, no problem. Otherwise, take this 60,000. Full ITC you have already taken. Now, divide it by 60. I am teaching you how to apportion. Baba, this is the commonly used capital asset. This 60 which is there, credit you have already taken. Now, this 60,000 ka credit, divided into how many parts? Sir, you have to divide it into 60 parts which are there. Sir, once you divide it into 60 parts, this is monthly part which you will get. Sir, this is known as, actually AA is known as TC. TC divided by 60 will give you TM, monthly. Are we clear, everyone? Sir, total common credit divided by 60 will give you monthly part. Monthly part is, sir, 1000 rupees. This monthly part which is there, every month you will have to see that this 1000 which is there, how much am I using for exempt, divided by total turnover. Sir, 1000 into exempt turnover is 10 lakh, total turnover is 50 lakh, then Baba 600. If this month you should add 600 to your output tax liability. This is just told by rule number 43. Are we clear, everyone? Yes sir, we got it. Listen to me very carefully here. So Baba, the first change which has come is nothing. First change is they are telling you can shall be extended up to, means you can now go ahead and take lower than 5 year also as the life, but for exam purpose we will consider the life as 5 year. Okay, now there is a change over here. Listen to me very carefully. What am I telling? Sir, if you don't remember rule number 43, you can go to my YouTube channel, rule number 43 old video which is there. Please see and then come back and see the video, because if you don't remember the old one, remembering the new one will be difficult, right? Yes sir. Next, listen. Sir, I have gone ahead and purchased one asset. Listen to me very carefully. I have gone ahead and purchased one asset which is there in the month of July, which I am using for my non-business purpose. Sir, or exempt supply. ITC should not be taken. I'll be repeating it again and again so that it settles down in your brain. Okay, everyone? Yes, sir. Next. Sir, I have gone ahead and used an asset which is for taxable supply. Please take the ITC, full ITC in your e-credit ledger. Sir, I have gone ahead and bought an asset. Baba, you only tell me. If you have bought an asset which is your for taxable supply and exempt supply, what to do? they are telling first take full ITC. Now you have to do apportionment as per rule number 43. Rule number 43 is telling nothing other than whatever is the ITC, please tell that as A. A is 60,000. How much is the ITC in your invoice? I am telling ITC I can see in my invoice is 60,000. They are telling take this 60,000. Any other commonly used credit asset, please write over here. I am telling nothing else. Then they are telling make this total. 1 minute everyone. Make this total. Sir, A will give you total credit, total common credit. Baba, A is known as common credit, A is known as common credit. Total common credit is 60,000. So they are telling this 60,000 please divide it by TC divided by 60 will give you monthly portion. Monthly portion is 1,000 rupees. Now this monthly portion which is there, TM into E by F. Are we clear everyone? TM into E by F. Baba everyone, if you guys can see over here, will give you TE. Actually this is to be made as TM. There is a problem in this whole formula which is there. I don't expect ICI to ask any question on this because this whole formula there is a mistake this time. Actually the law is TR, but TR has already been deleted. TR was there earlier, TR has been deleted, but TR has not been deleted from here. Actually it should be TM. Are we clear everyone? Yes sir. Sir, this TM which is there 1000 into E by F will give me TE, tax relating to exempt supply. That's all everyone. Can I go ahead? Listen to me very carefully. You just have to remember one thing. Sir, whatever the ITC is there, A. Commonly used credit, A. A will give you TC. Sir, TC divided by 60 will give you monthly amount. Monthly amount which is there, you will have to find out how much is relating to exempt supply. This will be added to your output tax liability. Basically this has to be reversed, and reversal how do we do? We add it to your output tax liability. Sir, this 1000 which is there into E by F you have to do. 1000 which is your TM. Exempt turnover, supposingly exempt turnover is 10 lakh, total turnover is 100 lakh. Sir, you will have to go ahead and how much you have to put in your output tax liability? Sir, how much? Sir, 100 rupees I'll have to put in my output tax liability. That's all everyone. Are we clear? Yes sir, we got it. Now listen to me very carefully. This was something which was already there. I have not gone ahead and told anything new. Now I am telling what is the new thing. Listen to me very carefully. Sir, this is the month of July. Baba, I am repeating again and again so that the formula settles down in your brain. I am going ahead and using something for non-business purpose or exempt supply. Don't take the ITC. I am using something for taxable supply. Please take the ITC. I am using something commonly. Common use. Common use means taxable supply plus exempt supply. Sir, taxable supply and exempt supply if you are using, first take the full credit. ITC is to be taken. Now, listen to me very carefully. This ITC which is there, supposing this is 1.2 lakh. This will be termed as A. A is equal to 1.2 lakh. Are we clear everyone? Now listen. Supposingly, earlier you had bought an asset. Everyone over here, earlier you had bought an asset, might be in the month of January. January you have bought an asset, which now from 1st of July you are going to use commonly. Sir, in January I had bought an asset which I was using for exempt supplies, and I had paid 60,000 rupees tax. Input tax credit I could not take because it was used for my exempt supply. But now I am going to use this. Big order has come, sir. Now I have to use it for my taxable supply and exempt supply also, both. So sir, now I am going to use it commonly. Everyone listen to me very carefully. Now you are going to use it commonly. Yes. So what they are going ahead and telling over here is, listen to me very carefully over here. Now they are telling this 60,000, Ramesh, you have to take full credit. Since you are going to use it commonly, you can write over here as A and take this 60,000 ka full credit. 1 minute. This is 1,20,000. This was of this month. This 60,000, first take full ITC. Take full ITC. Sir, take the ITC also, and Baba write it in the calculation also. How much? 60,000. Now, Baba, listen to me very carefully. Now you will tell me, sir, January till June, I have gone ahead and used it only for my exempt supplies, sir. So that much amount of credit should be removed, no? Baba, everyone listen to me very carefully. So sir, you have gone ahead and used it for Jan, Feb, March, 1 quarter, Jan, Feb, March, April, May and June. 2nd quarter, 2 quarters you have gone ahead and used it to provide what? Exempt supply. That much credit you should not get only, no? Yes, sir. So, sir, earlier what used to do? Everyone listen to me very carefully. Everyone over here. Everyone, this is the change. Listen to me very carefully. Sir, this 60,000 which was there. What we used to do is 60,000 into 5%. How many quarters? Jan, Feb, March, April, May, June. 2 quarters into 2. 60,000 into 5% into 2. 6,000. We never used to take the credit. Everyone listen. Earlier, before this change, what used to happen? This 60,000, we never used to take the credit of 60. What we used to do is 60,000 minus 6,000. We used to take the credit only 54,000 here. Earlier we used to take only 54,000. Now the change has come and the change is only very simple. What they have gone ahead and told Ramesh, don't take 54,000. Baba, earlier what you used to do? We used to say 60,000 for 2 quarters, Jan, Feb, March, April, May, June. For 2 quarters, we used to go ahead and remove 2 quarters के लिए 6,000 basically. Whatever the credit into 5% into 2 quarters, this 6,000 which was there, 60,000 minus 6,000, we used to take 54,000 only. Everyone listen, listen, listen. We used to now, AA we used to make TC. Listen to me very carefully. What used to happen earlier I am telling. 1,20,000 plus 54,000. We used to make it 1,74,000 and then divided by 60. Correct? Divided by 60, which was 2,900. You guys always used to tell me, in the class also students used to tell me, sir, this asset already 6 months it is used. It means only 54 months is left. Why they are still dividing it by 60? That was a problem in the law earlier. This has now been rectified. This has now been rectified. They are telling Ramesh, this you don't have to now. This how they have rectified, I will tell you. Are we clear, everyone? So, Baba, listen to me very carefully. Earlier, what used to happen? If one asset which was earlier used for making what? Exempt supply was later used commonly. Later used what? Commonly. Then what we used to do is, Baba, 60,000. We used to go ahead and take 60,000 full credit 9. We used to reduce 5% for 2 quarters and remaining credit 54,000 we used to take. And what we used to do is, whatever A was there, we used to go ahead and divide it by 1,70,000 divided by 60, 2,900 into E by F we used to do. Now, sir, what is the change? Listen to me very carefully. Now, the change over here is, they have gone ahead and told Ramesh, this 60,000, no. Take full 60,000 credit now. Take full 60,000 ka credit. So, sir, Ramesh, it will come 1,80,000. Right? This is TC. Everyone listen to me very carefully. Now they are telling take full ITC of 1,60,000 and 6,000 added to your output tax liability. Net effect. Net effect, everyone. 60,000 minus 6,000. Net effect actually is 54,000 only, no? So they have gone ahead and changed the method now. They are telling Ramesh, you should take the full ITC of 60,000 and Baba 6,000 you should add to your output tax liability, and this ka new name has been given which is known as TIE. The new name has been given to this which is known as TIE. Are we clear, everyone? Yes, sir, we got it. Everyone see over here, they have gone ahead and now told, sir, provided that where any asset earlier covered under A which was used for making what? A means what? A means which were used might be for making non-business or exempt supply. Baba, you are using for making exempt supply is now covered under this clause. This clause means now you are going to use it commonly. Earlier it was used under exempt supply. Now you are going to use it commonly. So they are going ahead and telling input tax rate in respect of that shall be denoted as A. Baba, what was the input tax rate relating to that? 60,000 which was there earlier. please go ahead and take that credit by denoting it as A. You should take the full credit. See, shall be credited to electronic credit ledger subject to the condition that the ineligible credit attributable to the period during which such capital goods were covered under A. Covered under A means they were used as used to make exempt supply. Baba, they were used to make exempt supply for how many quarter? 2 quarter, no. That much amount you find out. And Baba, denote it as TIE. How much? 6,000 to be denoted as TIE. Shall be calculated at the rate of 5% for every quarter, and the amount shall be added to output tax liability. So Baba, in the month of July, add this 6,000 to your output tax liability. Add this TIE to your output tax liability. Net effect 54,000. Are we clear, everyone? Yes, sir. Next. Further, TIE shall be calculated separately for CGST, SGST, IGST. No problem at all. Yes, sir. Now, listen to me very carefully over here. So, sir, tell me one thing. Tell me one thing, sir. What is the change? Baba, for this change, I will show you one example. 1 minute. Everyone, for this change, the example over here. Everyone over here. See, it says Ram Limited purchased a machine on 1/4/2020. We will draw and understand. I love drawing. Right? Everyone, please draw and understand. Everyone over here. On 1/4/2000, what are they telling? 1/4/2020, they purchased one machine. Ram Limited purchased a machine for 20 lakh. Sir, how much is the machine? 20 lakh rupees. And sir, GST is how much? 18%. 18% GST on 20 lakh means how much, everyone? 3 lakh 60. GST 3.6 lakh. Okay, sir. Then they are telling over here. 1 minute. Yes. Now they are going ahead and telling over here that the machine was used for making exempt supply. Sir, oh no. Sir, here you are going to use it for exempt supply. ITC of 3.6 lakh you cannot take on 1st of April. Okay. Sir, it means on April you would not have taken this credit. ITC you would not have taken. Okay, sir? Yes, sir. Next. However, from 1/4/2021, it was being used commonly. Now, sir, 1/4/21, you are going to use it commonly. Baba, if you are going to use it commonly, everyone listen to me very carefully. Earlier, what used to happen? Whenever you used to use something commonly, first of all, this 3.6 lakh commonly means it will come over here as A. How much will you take in A? Means how much is the input tax rate? Because you are not taken, you will take the ITC now. How much is the ITC you are going to take now? Listen to me very carefully. Baba, 3.6 lakh for every quarter. April, May, June. 4 quarters gone actually. April, May, June, July, August, September, October, November, December, Jan, Feb, March. 4 quarters gone. Baba, April, May, June, July, August, September, July, August, September, October, November, December is the 3rd quarter, 2nd quarter, 1st quarter, and Baba, 4th quarter. 4 quarters gone. So Baba, 3.6 lakh into 5%. 3.6 lakh into 5% into 4. How much it is coming up to? 3.3 lakh 60,000 into 5% into 4. They are telling 72,000. Everyone listen to me very carefully. 72,000. Baba, what you used to do earlier? Listen to me very carefully. Earlier, this 3 lakh 60,000 minus 72,000 we used to do. 3 lakh 60,000 minus 72,000 we used to do, and we used to take 2 lakh ITC of 2,88,000, and Baba, this 2,88,000 only was termed as A, and Baba, this A, listen to me very carefully, this ITC only became A, which is 2,88,000, and what you used to do is 2,88,000 divided by 60, how much? Divided by 60, 4,800 multiplied by E by F. Whatever used to come, we used to start adding to our output tax liability, and we used to do it for 60 months. Don't you think this was a mistake? Now what they have gone ahead and told, let's see what they are told. See, so Baba, I've written it down. Earlier what you used to do, 3 lakh 60 minus 72, we used to take ITC 2 lakh, which used to be A, basically added to our total credit, and then 2,88,000 divided by 60, 4,800 used to come, which we used to start adding TM, monthly to 4 lakh 4,800. Yes sir, 4,800 into E by F for 60 months we used to do. Are we clear? Now this was what we used to do earlier. Are we clear everyone? Now what is the error being rectified? Now post amendment what has happened, listen to me very carefully. They are going ahead and telling Ramesh, here instead of taking like this, do one thing. ITC when you are taking, A is equal to, you take the full credit 3,60,000. Are we clear? Yes sir. And Baba, here this 72,000 which is there, no, this 72,000 you add it to your output tax liability. Output tax liability, the name they have given as TIE, and Baba they are telling add this to your output tax liability. Take full credit of 3,60,000 divided by how much? 60 month. 3,60,000 divided by 60 month, you will get 6,000 rupees. Now this 6,000, Baba, earlier what you used to do? Everyone see, this 4,800 into E by F you used to do for 60 months. Sir, this reversal, every month we used to do for how many months? 60 months. Output tax liability we were doing for 60 months. Do you think it was correct? Asset only will not be there for 60 months. Now they are going ahead and telling Ramesh, divided by 60, 6,000 will come. Into E by F you do. But don't do it for 60 months, do it for the remaining useful life. Sir Ramesh, already 1 year is gone, means 12 months is gone. So Baba, E by F, this you have to add to output tax liability, not for 60 months, only for the remaining life. How much is the remaining life? 48 months. That's it everyone. That's it is the change. Earlier what was happening? See, earlier we used to go ahead and take 3,60,000 minus 72,000, 2,88,000. Whatever the amount used to come, that we used to divide it by 60. This amount into E by F we used to keep doing for 60 months. That was not correct. So now they have gone ahead and rectified it, and they are telling ITC to be availed, whatever 20 lakh is there into 18%, 3,60,000 came, right? This 3,60,000 full take the credit. Now I take full 3,60,000 ka credit divided by 60 months only. And Baba, whatever the reversal, here the reversal were there, no? How much was the reversal? 72,000, no? This 72,000 don't reduce from 3,60,000. This 72,000 added to your output tax liability. This 3,60,000 which is there, divided by 60, 6,000 came into E by F. Reversals you have to do how many months? For the remaining useful life of the asset. How much is the remaining useful life of the asset everyone? Remaining useful life is 48 months. So we'll do reversal also for 48 months. Are we clear everyone? Baba, that is the amendment which has been brought into now. This is the amendment which has been brought into. Are we clear everyone? Yes sir, we got it. Listen to me very carefully. They have gone ahead and told, sir, earlier what we used to do, everyone, I'll tell you once again, see over here. Earlier what you used to do, whatever the assets were earlier used for exempt supply, if they were used commonly, Baba, 3,60,000 minus how many quarters it has been already used, that much quarter ka amount you used to reduce. Net effect you used to put in the ITC. Net effect ka ITC used to take and divide it by 60. Are we clear? And into E by F, every month you used to keep doing reversal. But now they are telling Ramesh, this full 3,60,000 is there, no? That you take the credit divided by 60, whatever amount will come of that reversal you do only for the remaining useful life. Are we clear everyone? Yes sir. And sir, what about the 72,000 which is relating to exempt supply? Because for this much time I am used it for exempt supply. Baba, this 72,000 which is there, you can add it to your output tax liability, and the new name has been given TIE. Are we clear everyone? Yes sir, we got it. Can I go ahead and tell you once again? Baba, listen to me very carefully. 1 minute, I'll repeat it. Listen to me very carefully everyone. I am telling over here, sir, if you buy an asset which was used for, listen to me very carefully, exempt supply or non-business purpose, don't take the ITC. Sir, if you are going ahead and using the asset for taxable supply, take full ITC. If you are going ahead and using an asset for exempt supply, never take the, sir, if I am going ahead and using one asset commonly you are going to use it. The name of commonly used asset is A and take the ITC. But now take the A and Baba, take the ITC. How much is the ITC? I told 60,000. Please go ahead. Take the, you have already taken the ITC. Now divide it by 60. Make the monthly portion 1000 into E by F. Listen. This much you understood? Yes, sir. Now see, if supposingly this is the month of July, this is the month of January. In January you had bought an asset which you are using for exempt supply, of which ITC was 60,000, which you did not take because it was for exempt supply. Now do one thing. Now you have started, supposingly you are going to use this exempt supply wala exempt goods ke liye, what capital goods you are using, now you are going to use it commonly. So they are telling, take this, get it over here, take the ITC and add it to your calculation also. ठीक है, तो सर 60,000 full I got it here, but what about the 2 quarters which I have used for exempt supply? They are telling for 2 quarters 60,000 into 5% into 2 quarter. How much is 60,000? That was the asset ka ITC. 60,000 into 5% into 2 quarter will give you 6,000. This you add it to your output tax liability, and this ka name has been given as TIE. That's all, sir. Earlier what you used to do, no, we used to take only 54,000 net effect, but now they are telling don't give net effect, take full 60,000 here, add to output tax liability. Now 1,20,000 came. This 1,20,000 divided by 60, how much is coming, sir? This is known as TC, and Baba, TC should be divided by 60 to get TM, which is the monthly portion, total common credit. Sir, A is common credits, TC is total common credit, divided by 60 will give you monthly portion TM. Sir, 1,20,000 divided by 60 will give me 2,000 rupees. Everyone listen to me very carefully. Everyone over here now, but you have to be careful in your exam. This has to be divided by 60. This also has to be divided by 60. Actually, TC should be divided by 60, but you have to always remember that here into how much it is coming. 1 minute, everyone. I'll make it little small so that I can explain you. 1 minute. Here you have to be careful that this 60 which is there, this is 1,000 rupees. This is also 1,000 rupees. Actually, if you divide 1,20,000 by 60 also it is coming 2,000. But I have got it separately. Why? Into E by F, into E by F. This E by F you are doing, no? This you are going to do because already 2 quarters are gone, 6 months are gone. How much is the remaining useful life? That much only reversals you will do. So this into E by F you will do for 60 months because now the asset ka life is 60 months from here. But this asset since already used for 2 quarters, 6 months, it means you are going to do into E by F only for 54 months. That's all is the amendment which has been brought into. That's all is the amendment. If you want, you guys can copy this also. Are we clear, everyone? This, if you want, you can pause and copy it down. This is also, if you want, you can pause and copy it down. Are we clear? And Baba, when you do TM into E by F, no, what you get is TE, and TE is the exempt turnover, exempt amount. Baba, 2,000 into exempt turnover, supposedly 10 lakh, divided by total turnover, supposedly 50 lakh. 2,000 into 10 divided by 50. It will give you 400 rupees. Baba, this 400 should be added to your output tax liability with interest. Interest ka calculation is not important, but I hope you understood TE ka calculation. Listen. Now, this is when you are doing it together, but always remember one thing. Now, tell me one thing. Supposingly, I would have done it individually. Sir, into 10 lakh divided by 50 into 10 lakh divided by 50, you would have got over here 200, and here you would have got 200. Now, this reversal which is there will be done only for 54 months because 6 months already the asset has been used. This will be done for 60 months. I hope everyone is clear. This is the amendment which has been brought into. That's all, everyone. Can I go ahead, everyone? Yes, sir. We got it. Can we go ahead? Yes, sir. Next. Now, sir, the asset which were earlier covered under non-exempt means it was covered under taxable supply. Okay, one more thing I would like to tell. Listen, everyone. Supposingly, there was an earlier asset. I am talking in the month of July. January month May you had bought. Listen to me very carefully. In July you bought an asset for non-business purpose, exempt supply. ITC don't take. In July you bought an asset. Everyone over here. You went ahead and bought an asset which you are going to use for taxable supplies. Baba, take full ITC. You bought an asset which you are going to use commonly. Commonly means A. Take the full ITC. Sir, take the full ITC. So A amount is how much? Supposingly 60,000 rupees is the total amount. Now, there is an asset which you were using in the month of January, which you were going ahead and using for making taxable supply. Sir, taxable supply, how much is the amount? 1,20,000 is the ITC. Sir, I have already taken the ITC because I was using for taxable supply. Now I went ahead and started using it commonly. So they went ahead and told Ramesh, nothing. Now when you have started using it commonly, put over here as A. Everyone listen to me very carefully. Again, can I take ITC? No, don't take it again ITC, but it will go in calculation. They told Ramesh, put this 1,20,000 over here. It will come. This is 60,000, which is current month ka commonly used asset. This was earlier ka asset, which now has come over here. Put it 1,20,000. It will come 1,80,000 over here. This will become TC, total credit. Sir, total credit. See, Baba, between this and the earlier one, the difference is earlier one ka ITC you had not taken. So now you will take ITC also and it will go in calculation also. But in this one, since you had already taken the ITC, you will not take the ITC again, but it will go in calculation. Reversals you will have to do. Are we clear? Yes, sir. 1,80,000 is the total credit, common credit basically. Monthly amount will be this divided by 60 will give you how much? 3,000. Now monthly amount ko you have to see how much is the exempt turnover ka amount. Sir, TE is equal to 3,000 into exempt turnover divided by total turnover. Are we clear, everyone? Yes, sir. Baba, listen to me very carefully. For if you see now, you will have to be very careful with one thing, which is that into E by F. 1 minute. If I go ahead and tell you, this will be divided by 60 only. This also divided by 60. This also divided by 60. Correct? I have done TC divided by 60. Sir, this will give you 1,000. This will give you 2,000. Sir, here into E by F, into E by F. But sir, this E by F you will be doing, this E by F you will be doing only for the remaining useful life of the asset. How much is the remaining useful life? Sir, you have already used the asset for 6 months. So this E by F will be done for 60 months. This will be done only for 54 months. Are we clear, everyone? That's all they have gone ahead and told. That's all they have gone ahead and told. Can I go ahead, everyone? Yes, sir. Let's go ahead. Everyone see over here. This is the proviso which has been added. It says where any capital goods earlier covered under B, means earlier used for what? Taxable supply, are subsequently covered under C, means are subsequently covered under common use. The ITC claimed in respect of such capital goods shall be added to arrive, Baba, whatever the ITC claimed, what you had claimed, 1,20,000 you had claimed, yes, in respect of such capital goods shall be arrived at the aggregate value of TC. So you will have to go ahead and add it to your TC. Now, sir, A and A is the total common credit. That should be divided by 60. You will get the monthly portion. Sir, monthly portion came. See, ITC attributable to tax period on common capital goods during their useful life. Are we clear? Yes. For the removal of doubt, it is clarified that the useful life of any capital goods shall be considered as 5 years from the date of invoice, and the said formula, Baba, whatever formula you are applying, you shall be applicable during the useful life of the asset. It means if I am telling into E by F you are doing, you should do remaining useful life ke liye. This asset was taken in July only. So for this, the remaining useful life now on reverse for 60 months. This asset you have taken in January. So 6 months are already gone. Now on reversal for how many months? 54 months. Here TIE will not come. No. Here it will not come. It will come only when exempt supplies have been used for making common. Now exempt turnover, exempt capital goods are now used commonly. Okay, everyone. Only then you will have to go ahead and add to your output tax liability TIE. But here TIE calculation is not there. Okay, everyone. Yes, sir. Got it. Next, rest everything is same, everyone. Rest everything is same. We are done with your reversal relating to rule number 43. Baba, rule number 43 ka reversal ka one small example I have given you over here. What is the change that has come? You can copy this down. This will be reversal. Earlier it was reversal for 60 months, but now the reversal only will be done for 48 months. Okay, everyone. And sir, if you want, you can copy this also down. This is the change which has come, and this also, if you want, you can copy it down. Are we clear, everyone? Yes, sir. 54 months and 60 months. Right, everyone. Here we are done with your rule number 43 ka amendment. Alright, now the chapter for which we are going to study the amendments is the payment of taxes chapter. Everyone, payment of taxes. Everyone over here. Section number 49. Section number 49, which was there in the payment of taxes chapter. Along with that, rule number 87, sub rule 13, there has been an amendment. Section number 49, subsection 10 and section number 49, subsection 11 has been inserted. They are going ahead and telling we'll have to go ahead and understand with rule number 87 sub rule 13. So let's go ahead and understand section number 49, subsection 10, 11 read with rule number 87 sub rule 13. Baba, I have gone ahead and given one crux, that is more than enough. Right, everyone? Let's quickly understand what is the crux of the amendment. Basically, what is the amendment telling? It says amount in any major or minor head is now transferable to any major or minor head. Basically, in your e-cash ledger, you have major head and minor head. Let me open. Yes. Baba, do you know major head, minor head? Yes, sir. Major head we know. IGST, CGST, SGST, cess are the major heads which are there. Minor heads means, sir, tax, interest, penalty, fees and others are the minor heads. Baba, how many major heads are there? There are 5 major heads. Baba, what are the major heads? IGST, CGST, SGST, cess and UTGST. Here there is no UTGST because, Baba, in a registration, one person can either have SGST or he can have UTGST. Okay, sir. What are the 5 major heads? IGST, CGST, SGST and cess. What are the minor heads? Minor heads can be, minor heads, every IGST will have tax, interest, fees, penalty and others. Sir, CGST will have CGST, tax, interest, fees, penalty and others. Baba, do you guys remember, you should always deposit in your e-cash ledger whatever you have to pay. For an example, I have to pay CGST, then I should deposit in my CGST ledger only CGST, tax. If I have to pay penalty, then I have to deposit penalty. But now they are telling, if you have by chance deposited CGST and you want to transfer from CGST to SGST or transfer from CGST to IGST or IGST to CGST, sir, any transfer. Sir, supposingly I have deposited in my IGST tax. Now from my IGST tax, if I want to transfer to my CGST tax this amount, supposingly, Baba, you guys can see over here 50 rupees CGST is there. Can I transfer from here to IGST ka tax? Yes, Baba. Baba, from any major to another major head can be transferred. Can I transfer from here to here? Can I transfer from here to here? Yes, Baba, you can transfer now. Now, Baba, provisions have been made under section number 49, read with rule number 87. Provisions have been made where basically you can transfer any amount from any major head to another major head, or Baba, from here can you transfer to your tax to interest, can you transfer from tax to fees, can you transfer from tax to penalty? Sir, what happened? Everyone listen. I went ahead and deposited 50 rupees in tax. Can I transfer from CGST ka tax ka account in your e-cash ledger? Whatever you have deposited, now you can transfer from one ledger to another ledger. Baba, everyone listen to me very carefully. What do you mean by major head? Always remember, major head means IGST, CGST. If I say IGST, CGST, SGST or UTGST or cess, all these 5 are major head. Every major will have 5 minor. Minor means, what are the minor heads under IGST? Tax, interest, fees, penalty, others. Are we clear? Sir, what are the minor heads under CGST? Sir, tax, interest, fees, penalty, others are under CGST also. Same you have under SGST also. Same you have under cess also. Are we clear? This is total. Now, my question to you guys is, sir, if I want from my integrated tax means IGST account, if supposingly CGST account may I have 50 rupees, can I transfer from CGST to IGST? Yes, Baba. Can you transfer from here to here? Yes. Can you transfer from here to here? Major to major head transferable, no problem. Sir, can I transfer from here to here? Yes. Can I transfer from here to here? Yes. Baba, can you transfer from here to here? One major head to another major head, okay. One major head ka tax to another major head ka, sir, minors which are there. Can I transfer? Yes, Baba. You can transfer from here to here. You can transfer from here to here. You can transfer from here to here. There is no problem at all. Sir, can I go ahead and transfer from my tax to interest under the same major head? Baba, under CGST only. Can I transfer from tax to interest, fees? Can I transfer to penalty here? Yes, Baba, you can go ahead and transfer. There is no problem now. Everyone listen. It is telling any amount in any major or minor head is now transferable to another major or minor head. Registered person may freely transfer tax, interest, penalty, fees or any other amount from e-cash ledger to e-cash ledger under integrated tax, central tax, state tax, union territory tax or cess. Sir, how to transfer? For that, Baba, I have gone ahead and downloaded this form to show it to you guys. Everyone over here. It says, I have gone to my eCash ledger. In eCash ledger, when you go to your eCash ledger, you will see over here file GST PMT09 for transfer of amount. Can you guys see? You can file your GST PMT09. So, sir, how to transfer? You will have to go online and file this form which is known as GST PMT09. Then, sir, Baba, once you go ahead and put over here in your eCash ledger GST PMT09, earlier you were not allowed. Whatever you have to pay, you have to deposit that only. If I have deposited in CGST by mistake instead of IGST, Baba, you have to claim a refund of CGST and then deposit under IGST and then make your payment. But now from CGST to IGST, CGST to SGST, any amount can be transferred anywhere freely. My cash ledger, can't I transfer? So government now gave the option that you have to file GST PMT09. How to file? Everyone see over here. Here, when you open GST PMT09, it will show like this, that what is your cash ledger mein balance. Cash ledger mein balance, it will show, supposingly, I have 50 rupees here and 50 rupees here. It will show what is my balance. Then it will ask, preview of updated balance. How you want the balance to be. Sir, they are telling, major head say, transfer from which major to which minor do you want? So here it will come IGST, CGST, SGST. From which major head you want to transfer to which minor head? How much is the amount available? Which minor head you want to transfer? See, Baba, you have to select over here. Everyone over here. You have to select over here that I want to transfer from IGST. Minor head. I want to transfer from tax ka minor head. Okay. Everyone, tell me one thing. If I have to transfer 50 rupees CGST, which is in the tax ka minor head tax. So I will write over here CGST minor head, which is tax, from that I want to transfer. It will show available balance 50 rupees. I'll have to select which minor head, major head, other major head I want to transfer. Now, supposingly this I want to transfer to IGST, and in IGST I don't want to transfer to tax, I want to transfer to interest. Then I'll have to go over here and I'll have to select major head IGST, and I want to transfer to tax or I want to transfer to interest. If I want to transfer to interest, I'll have to select 50 rupees I want to transfer here. If I select 20 rupees, they will transfer 20 rupees. So then you will have to go ahead and file your GST PMT09. This is GST PMT09. Basically, you have to go ahead and file GST PMT09 online for transferring from one major head to another major head ka, means one minor to another minor. So under CGST, which is the major head, the minor head is tax. From here I am transferring to another major head, which is IGST. Under that I am transferring to interest. So Baba, you have to select from which major head you are transferring from CGST to minor head tax. Amount available, it will show over here. Then you are transferring to, so it will, you will have to transfer to IGST if you want to transfer. IGST, which minor head, they will ask you. There are 5 minors. You want to transfer to interest, then transfer to interest. Now you can go ahead and use this 20 rupees to pay your liability of interest. Are we clear, everyone? Yes, sir, we got it. Listen to me very carefully. Earlier you were not supposed to, you are not allowed to transfer. If you deposit anything by mistake, plus you can take a refund freely, take a refund of it, and then you have to deposit freshly in the new ledger. And that refund process, I am telling, sir, my amount only. Why am I not allowed to transfer? Then government went ahead and allowed. I am talking about e-cash ledger, not e-credit ledger. On e-credit ledger, I'm not talking. I'm talking only about e-cash ledger. Are we clear? Now, whenever you are transferring, supposingly you transferred from CGST account ka tax. Whenever you transfer from the CGST account, no, government will say, I am deeming that I have given you a refund. As soon as you transfer, it is deemed to be a refund. And sir, I transferred to, supposingly I transferred to IGST ka tax 50 rupees. Government will deem that from here it is refunded, and from here transferred to means it is deposited in the IGST account. So transfer from, whenever you transfer from one account, it will be deemed that government have refunded you the amount and government have deposited in the other account. Are we clear? Yes, sir. So that is what is being told over here. Use GST PMT09 on the government portal for transferring, which I have just now shown it to you. Such transfer from e-cash ledger shall be deemed to be a refund from that e-cash ledger. Baba, when I am transferring from this e-cash ledger, which is CGST account, it will be deemed that from CGST account refund has been given to you. And such transfer to e-cash ledger means you are transferring to which e-cash ledger? You are transferring to IGST. It will be deemed that there is a deposit in the IGST ledger. Shall be deemed to be a deposit in that e-cash ledger. Similar provisions have been made under SGST Act and UTGST or IGST Act also. Are we clear, everyone? Yes, sir. Sir, what is the crux of the amendment? Nothing. The crux of the amendment is, sir, whenever you want, you can transfer from any major head to another major head, from this to this, whenever you want. You can transfer from here to here, wherever you want. In your e-cash ledger, you can transfer an amount. How to transfer? You have to file this form, which I am just now showing it to you. This form is known as GST PMT09 on your common portal. When you go to the common portal, this form will open. It will show what is the balance available. And sir, how to go ahead and transfer? You have to record over here. Basically, you'll have to put from which balance you want to transfer. Sir, if you are transferring from CGST account, tax balance 50 rupees, it will be, sir, here when you are transferring from this account, it will be deemed that it is refunded to you. And if you transfer to supposedly IGST account, ka penalty mein 50 rupees you transferred, from here it will be deemed that it has been refunded, and here it will be deemed that it has been deposited. Such transfer to the another account will be deemed as if it is a deposit made by me in that account. And here it will be deemed that government have refunded me the account. Are we clear? Refunded me the amount. So it says over here, any amount in any major or minor head is now freely transferable to other major or minor head. Registered person can freely transfer only e-cash, not credit. Okay, use GST PMT09 on the common portal. Sir, when you are transferring from one e-cash ledger, it will be deemed to be a refund from that e-cash ledger, and transfer to where you are transferring to other ledger, transfer to e-cash ledger shall be deemed to be a deposit in that e-cash ledger. Similar amendment has been done under SGST or UTGST Act also. Are we clear? Yes, sir. Now, they are telling over here, the next one is refund. Refund of tax that has been paid wrongly or excess by utilizing ITC. Everyone listen to me very carefully. Now, you have paid some tax excess. They are telling over here, when rule number 86 sub rule 4A has been introduced. 86 sub rule 4A has been introduced, which says where a registered person has claimed refund of an amount which has been wrongly paid in excess for which debit has been made from the electronic credit ledger, the said amount if found admissible. Everyone listen to me very carefully. I will tell you. In my GSTR 3B, when I told my output tax liability, but I told output tax liability is 10 lakh rupees. I used my input tax credit. Okay, everyone listen to me very carefully. I went ahead and used my input tax credit and paid this 10 lakh rupees. Everyone, I used my input tax credit and paid this 10 lakh rupees. Later on, okay, later on it was realized that Baba, actually my output tax liability was not 10 lakh rupees, it was only 8 lakh rupees. It means I had to pay, Baba, everyone listen to me very carefully, I had to pay only 8 lakh, but I had paid 10 lakh. Actual liability was how much? 8 lakh. By mistake, I paid 10 lakh. So what will happen over here? Government will say, Ramesh, oh no, we have to give you 2 lakh rupees ka refund. Yes or no? Now government, when it is giving you this 2 lakh rupees ka refund, government will say, Ramesh, how did you make the payment? I will say, I made the payment through my credit. Government will tell, we will refund also not in cash, we will refund also in credit ledger. Are we clear, everyone? Yes, sir, we understood. Listen to me very carefully. The government now have gone ahead and told that, sir, if by chance, supposingly, I had to make a payment of 10 lakh rupees, output tax liability 10 lakh. Okay? I used my input tax rate of 10 lakh and made the payment. Now, what happened over here? Supposingly, later I realized that I should have actually made a payment of 8 lakh rupees only. Actual should have been 8 lakh. But what I did, I used my credit and made a payment of 10 lakh. So government went ahead and told, Ramesh, actually you should have made 8 lakh. Okay, I will go ahead and give you a refund of 2 lakh. You know what was happening? SSCs were taking this 2 lakh rupees in cash back. Government told, you told ITC ka refund cannot be taken. Let's pay wrongly and then claim a refund. Refund will come in cash. Government became smart. Government went ahead and told 86, Rule 86, Sub Rule 4A has been inserted. Now, when you are asking this 2 lakh rupees refund, government will first see from where did you pay this 2 lakh. Government saw that you paid using your input tax credit. Government will give this refund also back in your e-credit ledger. They will give you the refund, but they will not give you in cash because the original mode of payment was credit. You used your credit. The refund also will go in the e-credit ledger. Are we clear? That is the amendment made. Tax wrongly paid utilizing e-credit ledger. Sir, I had paid tax wrongly by using my e-credit ledger. ITC I used. When refunded, shall be recreated to e-credit ledger. Sir, later they realized 8 lakh should have been paid. 2 lakh, I asked for a refund. I filed refund application. Refund, when it is given, it will be refunded to my e-credit ledger. It will not be given as a refund in cash. Are we clear, everyone? What people were doing? No, by mistake, they were paying 50 lakh rupees wrongly. And then they were claiming a refund cash mein. Because ITC ka refund is never given. Baba, one thing you should know, whatever your input tax rate is there, no, you should use it. Refund will never be given. But what people used to do, supposingly, Baba, I am going to close my business over here, my shop is going to close. What I used to do, by mistake, I used to make the payment. And I used to say, government, by mistake, I have made the payment, give me the refund. And I used to take cash refund in my pocket and go home. Now government told cash refund, no cash refund. If you paid using credit, refund also in the e-credit ledger only. Gone. Are we clear? This is the amendment. Refund shall be given in the same mode that was used for payment. You made the payment by using credit. Refund also will go to your e-credit ledger. Okay, everyone? Got it. Next. Rule number 86A. Very, very important for your exam. Rule number 86A has been introduced. Baba, government is telling, Ramesh, in your e-credit ledger, whatever the credit is there, if the commissioner believes that you have taken it fraudulently, Baba, I am telling in my ITC ledger, everyone listen, in my input tax credit, e-credit ledger mein, what I did, I went ahead and took 10 lakh ka credit. Commissioner is thinking, actually Ramesh is not eligible to take the credit. Baba, commissioner feels that you are a fraud, that commissioner can go ahead and block this credit. He will not allow you to use it also. He will not allow you to use it also. He will not allow you to take a refund also. If he believes that this credit which you have taken is fraudulent. Let's go ahead and read the new rule which has been inserted, rule number 86A. It says, condition of use of amount available in e-credit ledger. Baba, I have gone ahead and given a crux. Let's read the crux. That should be more than enough. Basically, commissioner can block your e-credit ledger also now. He will not go ahead and allow you to use your e-credit ledger when, Baba, the condition has been told over here. What are the situation? Very, very important question for your exam. What are the situation when commissioner can go ahead and block your e-credit ledger? Everyone, commissioner or officer has reason to believe that ITC available in the e-credit ledger has been availed fraudulently or is ineligible. Baba, you have 10 lakh rupees ka ITC which you are going to use against your output tax liability. Officer is telling, Ramesh, this 10 lakh rupees ka ITC, officer believes that you have taken fraudulently on the basis of some fake invoices, bogus invoices, then he will go ahead and block. What are the reasons he can go ahead and take for blocking your ITC ka balance? Number one, reason for blocking. ITC on which, on the basis of document issued by the supplier who is not existent. You are telling you purchased from Ram Limited. Ram is not existing only. Huh? Ram gave you the invoices. Now Ram closed his business and gone. Ram is not existing only. You are taking in ITC on the basis of an invoice. The supplier is not there only. Supplier is non-existent or not conducting any business from declared place of business. Baba, your invoice is telling Ram Limited has their business in KR market. Where that address pay, there is no Ram Limited only. Basically, it's a fake supplier ka case. Sir, you have taken ITC on the basis of a fake supplier ka invoice. Then they are telling that ITC can be blocked by the commissioner. Commissioner came to know Ramesh is taking 10 lakh rupees ka ITC on the basis of an invoice. Commissioner inquired and he saw that this supplier is not there only. Supplier only not existing, or Baba, supplier is not existing in the registered place of business where he has given the place of business. Supplier commissioner went and saw, or his officer went and saw, and there is no one named Ram Limited over there. It means the invoice which I am taking, on the basis of which I am taking the credit, that supplier who is there, who has supplied me the goods, I am telling that this supplier supplied me the goods, that supplier is only not there. Fake supplier ka invoice pay if you take the credit. That is why Baba, always whenever you buy goods, no, you should buy it from those supplier who are credit worthy, not useless supplier. Are we clear? Sir, how to go ahead and check? Baba, go online, use his GSTN number, check whether he is filing all his returns or not. You can check online. Are we clear? Yes, sir. So, if you have taken ITC on the basis of document of what are the reason? Number one, ITC on the basis of document issued by supplier which is not existing. Supplier only is not existing. Or non-conducting any business from the declared place of business. He is declared that he is there in supposingly MG Road, but he is not there only. There is no business place only. Then officer is telling, commissioner is telling, hey, there is a fake supplier ka invoice. If I have taken the ITC on the basis of that fake supplier, my ITC will be blocked. That much only will be blocked. Supposingly, I have 10 lakh credit which is there, then officer will say Ramesh has taken on the basis of that invoice 5 lakh credit. 5 lakh credit will be blocked by him. 5 lakh I'll not be able to use the credit. Are we clear, everyone? Yes, sir. Now, so I gave the shortcut name is fake supplier. I have taken the ITC on the basis of fake supplier ka invoice. Then Baba, that ITC will be blocked by the commissioner. Commissioner now has the power to block the ITC. I took the ITC without receipt of goods, services, or both. I am not receiving ITC. I am not receiving goods. Baba, you buy goods and then you take the invoice and take the ITC. Number one, everyone listen to me very carefully. Do you remember what are the conditions for taking ITC? Yes, sir. Conditions for taking ITC, section number 16, subsection 2. If you guys remember, T square, TT, RR. Sir, number one, tax paying document. Tax paying document. You should have the tax paying document. Number two, sir, tax for T for tax paid to government. Tax paid by supplier to government. Number three, receipt of goods. Sir, you should have received the goods or service or both. Only then you can take the ITC. R for return filed. Return filed by supplier. Only then you should take the ITC. Now I have taken ITC on the basis of tax paying document which is a fake document. Baba, you will not get ITC. Means violation of section number 16 to A. Over here, everyone. So violation of section number 16 subsection 2. Right, everyone? Tax paying document is a fake document. Then Baba, you will not get ITC. Right? Next. Sir, ITC without receipt of goods. Baba, everyone. Receipt of goods, services and both is very important for taking ITC. Eligibility, 4 criteria. Tax paying document, tax paid to government, receipt of goods and return filed. Sir, you have not received the goods only. Fake document is there. Sir, you just have the invoice. Goods are not received only. How can you take ITC? You took the ITC. Commissioner will block the ITC. Next. Sir, non-payment to government. Over here, everyone. Sir, tax paid by supplier. Supplier, if it does not pay the tax and you are taking the credit can be blocked by the commissioner. Sir, it says over here, ITC on the basis of document, the tax charge in respect of which has not been paid to the government. If it does not pay to the government, your ITC which is there, which you are going ahead and claiming, I have this document. I paid the tax 10 lakh rupees to him. He has to pay to the government. He did not pay to the government. My ITC which I am claiming on the basis of this document will be blocked. Commissioner now has the power to block. Sir, why will he block? I have paid. No, Baba, if you have paid, make sure that your suppliers are credit worthy. Otherwise, don't buy from them. If they are useless people, don't buy from them. Buy only from good suppliers. Can I go ahead? Yes, sir. Next. Now, this person who is there, the person who is claiming the credit, I am taking the ITC, I am only non-existent. Fake, 1 minute everyone. Fake recipient. Recipient is not existing or not conducting any business from declared place of business. Baba, I am online filing return, everything is happening. But commissioner told, let's go and see who is this recipient, who is this person claiming the ITC. They came to my place of business, no one is there. I am only not there. Fake recipient. Fakely people are claiming ITC. Fake recipients are there. Then also they can go ahead and block the ITC. Are we clear? ITC without receipt, without document. Sir, I don't have document only. Baba everyone. Tax paying document should be there. Tax paying document only I don't have. How can I take ITC? Sir, if you don't have tax paying document, registered person availing ITC is not in possession of tax paying document or other document under section number 36. Baba, under section number 36 they have told bill of entry. Under section number 36 they have told ISD ka document. Whatever documents are told under section number rule number, basically under rule 36. Okay everyone, you have to write rule 36. Okay, under rule number 36, if you don't have the document, then Baba ITC, if you have gone ahead and taken without tax paying document, they are telling your ITC will be blocked. Can I go ahead everyone? Yes sir. In the above scenario, commissioner may not allow debit of such amount to discharge the liability or even claim refund. Everyone listen to me very carefully. I have gone ahead and taken 10 lakh rupees ITC. Then Baba, commissioner has the power that he can go ahead and block as much as credit. He will not block full. He will block only that much credit which he feels is fraudulently taken or I am ineligible. I have taken fraudulently or I am ineligible for that credit. Sir, what are the scenarios when he can block? Then that I have already gone ahead and told. Number one, sir, I am taken on the basis of those documents which are issued by fake supplier. There is no supplier only. Supplier is only not existing. I have taken on the basis of fake supplier ka document. Next, bogus invoice. I have not received the goods. I am just buying the invoices and I am taking credit. Commissioner will block that credit. Sir, non-payment. Supplier is not paying the tax to the government. So this underlined ones are just shortcut keys which are given by me. In the exam, don't write this directly. Exam may you have to write this. Okay, everyone? Yes, sir. ITC on the basis of document, the tax charge in respect of which has not been paid to the government. Supplier does not pay the tax. Your tax which you have taken will be blocked. Are we clear? Fake recipient. I am only not existing. I am taking credit. Officer is telling, who is this person taking the credit? He is only not existing. Let's go to his place of business. No one is there. Plain ground is there. They are telling if there is a fake recipient, then also ITC will be blocked. Nowadays, people create all these fake companies, etc., right? And claim ITC. Baba, all those companies now, their ITC will be blocked. Next, sir, I have taken the ITC, but I don't have the document only. No supporting document, don't take ITC. Otherwise, officer will block the credit. Now, sir, if officer sees any of this scenario, officer can go ahead and block that much credit. Sir, supposingly, out of this 10 lakh, 1 minute, this 10 lakh rupees, only 2 lakh rupees ka invoice ke liye, tax invoice ke liye, the supplier is fake. Then only 2 lakh rupees ka ITC will be blocked. I will not be allowed to use that credit. I will not be allowed for temporary purpose. They will freeze that credit. Right, everyone? Next. So, in the above scenario, commissioner may not allow debit. It is up to the commissioner. If you can explain him, very good. Otherwise, he will block it. Such amount to discharge the liability, or Baba, if you want to claim a refund of your ITC also, refund of ITC in generally it is not allowed, but only in two scenarios it is allowed. When you go ahead and export or inverted duty structure, there are two scenarios which are there. Okay? In those two scenarios, refund of ITC is allowed. That refund also will not be given to you. Unblocking. How will the commissioner unblock? If commissioner or officer authorized is satisfied that the condition no longer exists, he may allow such debit. Baba, whatever these conditions were there, no longer exist, then he will go ahead and allow. Might be you have not received the goods. Next month you receive the goods. You will tell, sir, I have received the goods. Please allow no. Then he will allow me to use the input tax credit. Basically, if all this condition any condition is no more existing, then Baba he'll say, okay, let's go ahead and allow him. Unblocking can be done. Or Baba, if 1 year has already passed, Baba, maximum time he can go ahead and block the credit. Restriction shall cease to have effect after 1 year from the date of imposition of such restriction. This restriction of blocking your credit can be maximum 1 year. More than that, they can't go ahead and block the input tax credit. Are we clear, everyone? Yes, sir, we got it. Everyone listen to me very carefully. Read this in detail. in your exam when this question comes, no, Baba, I've explained you A ka 1, 2, B, C, D, all of them. But in your exam, try to write this. Try to write this only. I have given it in shortcut over here. This shortcut may what I have given is just for you to remember. Just for you to remember. I always believe that law may you should try to write law ka language. Write this A, B, C, D. I have gone ahead and divided it into points. But in your exam, try to write it like this. Sir, blocking and unblocking of ITC by the commissioner. Commissioner has the power to go ahead and block the ITC when he sees it's a fake supplier or it's a fake recipient who is there. Baba, don't write fake supplier, fake recipient in exam. No, no, no. These are just for you to remember. Fake supplier, fake recipient, ITC document you don't have. Baba, non-payment of tax by him to the government or bogus invoice ka case mein basically he can go ahead and block the credit. Unblocking can be done by him if he feels that there is no more requirement to block the credit or Baba 1 year has passed. If 1 year passes by, then the unblocking will happen automatically. Are we clear, everyone? Yes, sir. Next. Now, the next chapter over here is returns. Returns mein one amendment has come. Total bakwas amendment. Baba, now annual return which you were filing, no, GSTR 9 and 9A, annual returns which were being filed. Earlier, commissioner did not have the power to go ahead and extend the time limit for annual return. Annual return, you guys already know. For annual return for every year, due date are extending. Now, commissioner did not have the power to go ahead and extend the time limit. So, now they have gone ahead and told commissioner now empowered to extend the time limit for furnishing annual return, that is GSTR 9 and 9A. Earlier, sir, how extension was done then? Earlier, the extension was done by the CBIC. Baba, they had gone ahead and issued an order. Earlier, the same was extended by issuing an order, which was removal of difficulties order, which was issued under section number 172. Now, Baba, they need not go ahead and issue removal of difficulties order. Commissioner can go ahead and extend the time limit for the by issuing a notification. Are we clear? Now, commissioner empowered to extend the time limit for furnishing annual return, that is GSTR 9 and 9A. Earlier, the same was extended by issuing order using the power conferred under section number 172, that is removal of difficulty order. Earlier, annual return ka due date has to be extended. Baba, CBIC used to issue one removal of difficulties order saying, Baba, because there is a difficulty which taxpayers are having to furnish annual return, we are extending the time limit to furnish the annual return. Baba, so much is not required. Now, commissioner can issue one plain notification and due dates can be extended. Here we are done with, Baba, your amendments till the chapter of returns. Here we are done with the amendments, right, everyone? We'll close our amendment ka discussion over here. Bye, guys. Now listen to me very carefully. You have to read the amendments again once. Baba, slowly read the amendment, and Baba, I'll close my discussion on the amendments over here. If you like the video, do comment and let me know if you enjoyed the video. Right, everyone? It gives a lot of motivation because we are sitting over here at our place without students and Baba trying to teach you in the best manner possible. So please comment and let me know how did you enjoy the video, and Baba, any other suggestions which you have, any other comments which you have, do let me know. Right, everyone? Take care, guys. Bye. Keep enjoying the classes. Bye, guys.